welcome to another video, students. Okay, so we have finished first four chapters: practice questions, unsolved case, and the past examination question. We'll go into chapter 6 now, which actually includes branch accounts and departmental accounts. Usually one question is asked from this chapter for 7 marks in the exam. So first we will solve the practice questions which are there, numerical questions which they have given. We'll solve that. Question number 1. Okay, we'll go into question number 1. Mr. A, a cloth trader of Kolkata, opened a branch at Nagaon on 1/4/2020. The goods were sent by head office to branch and invoiced at selling price to the branch, which is 25% plus cost. So goods are sent at cost plus profit. That means goods are sent at invoice price. The following are the particulars relating to the transactions of Nagaon branch. Prepare Nagaon branch stock account, branch debtors account, branch adjustment account showing the net profit of the branch for year 2022-23. Remember, we had multiple methods: debtors method, stock and debtors method, trading and P&L method. This is stock and debtors method. So what we have to understand is question number 1. Question number 1 in the books of, see, prepare all this, but it's prepared in the books of Mr. A. In the books of Mr. A, okay, what are we going to prepare? Branch stock account, branch debtors account, and branch adjustment account. Branch stock account. Branch stock account is the first thing that we are supposed to prepare. When goods are sent at invoice price, we know that there is always going to be branch adjustment account. Branch adjustment account. Branch adjustment account. After that, after branch adjustment account, then they have asked you to prepare branch debtors account. Branch debtors account. What else can be asked? They can ask branch cash account. They can ask branch P&L account, branch expenses account. All this can be asked, but they have not asked this in this particular question. Okay, but they have also asked you to show the net profit of the branch. So what we will do, we will also prepare one more account, that is branch P&L account, so that we can find out the net profit. Branch P&L account. Clear? 4 ledgers I am preparing. Branch cash also can be prepared. Now we'll go into the question. First, goods sent to branch at cost to head office 4,50,000. But goods are sent at what price? Cost plus 25%, which is 25% of cost price they said. So what will be the entry? Branch stock account debited to goods sent to branch account. Branch stock account debited to goods sent to branch account 4,50,000. 4,50,000. Clear? Then the profit portion, branch stock account debited to branch adjustment account. Branch stock account debited to branch adjustment account, 25% it is. So you can take it 4,50,000 into 25%. 4,50,000 into 25% will be 1,12,500. Why don't we have opening balance in the stock account? Because we just started the branch. There is no opening balance. So here we are going to write by branch stock account 1,12,500. Clear? Can you see? At cost to head office. It was sent at cost to head office. Sales. Cash sales, credit sales. Cash sales, credit sales. What is the entry for cash sales? Branch cash account debited to branch stock account. So here we are going to write by branch cash account 2,10,000. Next, okay, what do we know? Credit sales. Credit sales, what is the entry? Branch debtors account debited to branch stock account. Branch debtors account debited to branch stock account 3,20,000. 3,20,000. Go to branch stock and write by branch debtors account 3,20,000. I hope you remember the regular questions which we have solved. Okay. Next, cash collected from debtors. Cash collected from debtors 285. What should be the entry? We collected money from debtors. So branch cash account debited to branch debtors. So we will write over here by branch cash 2,85,000 is collected from debtors. Next, returns from debtors. Debtors have returned goods. It's like sales return. So what happens? Branch stock increases. So branch stock account debited to branch debtors. Branch stock account debited to branch debtors account 10,000. In branch debtors you write by branch stock account 10,000. Next, discount allowed. Discount allowed is how much? 8,500. What should be the entry? Branch expense account debited to branch debtors. So you'll write over here by branch expenses account 8,500. Then in branch P&L you will write to branch expenses. Expenses are always transferred to P&L. So branch P&L will have 8,500. Clear? Next, cash sent to branch for freight, for salaries, for other expenses. Cash sent to branch for these things. So 30 plus 8 plus 12. 30,000 plus 8,000 plus, one second, 30,000 plus 8,000 plus 12,000. Total amount sent to branch for the expenses is 50,000. What should be the entry for this? Branch expenses to bank account. Branch expenses to bank account, because head office is making payment. Then the expenses will be transferred to P&L to branch expenses 50,000. Clear? Next, spoiled clothes written off at invoice price. Spoiled cloth is written off at invoice price. Normal loss estimated at 15,000. Can you see? Normal loss, ignore. Spoiled cloth written off at invoice price is 10,000. So what we are going to do? Invoice price is 10,000. So we are going to reverse that, and I'm going to write by abnormal loss, okay, 10,000, but out of that we need the cost 10,000 minus 20%. 25% is on cost, so 20% on sales. So this becomes 8,000 by branch adjustment account 2,000. 2,000 is the profit portion on that abnormal loss. To branch stock 2,000. 2,000. Is this clear? Yes. Next, normal loss estimated at 15,000. For normal loss, usually we don't pass any entry. Just going to ignore it. Okay, this should be it. Okay. Closing balance and all they have given. Now, what we will do? Do we know the stock? Do we know the stock? How much is the closing balance? Now, how will we find the closing balance? That is important. Working note, closing balance of stock. Closing balance of stock. And this will be at invoice price. It will be at invoice price. So, what we have to understand, okay, understand this. Goods sent was 4,50,000 plus 1,12,500. 5,62,500. This much goods are sent. Okay, you can see we have passed the entry also, 1,12,500. That is the total goods which are sent. After that, sales. When goods are sold, what happens? Minus sales. How much goods are sold? 210 and 320. 2,10,000 plus 3,20,000. So total is 5,30,000. 5,30,000 is sales. Then cash collected from debtors, returns from debtors. Returns from debtors, what will happen? It will come back. So add sales return. 10,000. Everything we are taking it as invoice price. Discount allowed doesn't matter. Money sent doesn't matter. Spoiled clothes written off. Okay. Spoiled clothes written off. They have given 10,000. So minus spoiled cloth. Spoiled cloth 10,000. Okay. Now you can check 562,500 minus 5,30,000 plus 10,000 minus 10,000. So 32,500. 32,500 should be the balance. They told normal loss is estimated at 15,000. Normal loss is estimated at 15,000. So what is the balance? See, out of 32,500, you can see that normal loss is 15,000. That means 32,500 minus 15,000, 17,500 should be the closing balance. Here they have told stock shortage 17,500. No, they have not told shortage. Remaining will be the closing balance. Closing balance is 17,500. Are you getting this? So normal loss, what you're going to do? You're going to remove the normal loss. And here we are going to write by. Okay, by branch expenses 15,000. Sorry, 15,000 minus 20%. That makes it 12,000. Then you're going to write by branch adjustment. Remove that 3,000 profit portion. And here you're going to write to branch stock 3,000 the profit portion. Okay, this is how we are going to record. And then we are going to write by balance carried down. Balance carried down is 17,500. We have calculated that. If you check now, this will be the balancing figure. If you check, it will be the balancing figure. 4,50,000 plus 112,500 plus 10,000 minus 210 minus 320 minus 8,000 minus 2,000 minus 12,000 minus 3,000. You'll get 17,500. This is at invoice price. This is at invoice price. So what we are going to do over here, to balance carried down 17,500 into 20%. 25% is on cost. 17,500 into 20%. 3,500 is the closing balance of branch adjustment account. Then what we are going to do, whatever is there, okay, 1,12,500 minus 2,000 minus 3,000 minus 3,500. 1,04,000 is there. Okay, to branch P&L account 1,04,000. Transfer the profit, whatever is there over here, to branch P&L. And in branch P&L, we are going to write by branch adjustment account 1,04,000. Branch adjustment account 1,04,000. Then you can close the branch debtors. How will you close the branch debtors? 3,20,000 minus 285 minus 10,000 minus 8,500. 16,500 you can write by balance carried down. That is the closing balance of branch debtors. Okay. This is the situation. So you have abnormal loss to abnormal loss. What is the abnormal loss? We have already calculated and kept it 8,000. Abnormal loss 8,000. And to branch expenses, the normal loss 12,000. Normal loss is 12,000. So minus 8,000 minus 12,000, 25,500 is net profit. To P&L account balancing figure 25,500. Okay, 1,04,000 minus 8,500 branch expense minus 50,000 branch expense minus abnormal loss of 8,000 minus 12,000 of normal loss. 25,500 is the net amount that we have profit. Okay, they have shown some other amount only, which is wrong. Yes, let's go into next question. Is it clear? So this is your stock and debtors method, which can also be asked in the exam. Okay, they have branch stock account, branch adjustment account, branch debtors account, branch P&L account, and some working notes to calculate closing stock. Let's go into question number 2. Question number 2. A Nagpur branch has a branch at Noida to which he charges out goods at cost plus 25%. That means you're sending goods at cost plus 25%. Noida branch keeps its own sales ledger and transmits all cash received to the head office every day. Whatever money they get, every day they're sending the money to the head office. All expenses are paid from head office. Expenses are all paid from head office. Transactions for the branch were as follows. They have given the transactions. Prepare Noida branch trading and P&L account for the year ended in the head office books. What did they ask you to prepare? Trading and P&L account. Okay. They have asked you to prepare branch trading and P&L account. You can write branch trading and profit and loss account for the year ended. For the year ended. Which year end we are preparing all this? 31st December 2023. Don't forget to write in the books of, always it's prepared in the books of head office because it's dependent branch. Nagpur merchant has a branch in Noida. So in the books of Nagpur merchant. Okay. We are going to think as if we are going to prepare the trading and P&L of the branch sitting in branch, but it is prepared by the head office. It's prepared by the head office. Now let's go into the question. First, stock. 1/1/2023. We have some stock. Okay. So what should be the entry? Opening stock. You're going to write to opening stock 22,000. Transactions for the branch were as follows. All figures are given. Stock is 22,000. Debtors 200. That will not bother us because we are preparing trading and P&L. Petty cash 200. That will also not bother us because we are preparing trading and P&L. Cash sales 5,300. So what we are going to write? We are going to write by sales 5,300. Next, goods sent to branch 40,000. So you're going to write to goods sent to branch. For branch, it's like an expense 40,000. Next, collection on ledger accounts. Collections on ledger accounts. That means you have collected money from debtors. Goods returned to head office. Goods returned to head office. What we can do? We can show here only 40,000 minus 600. That makes it 39,400. There only you can write purchases less returns. Bad debts. Bad debts will go into P&L. You can write over here to bad debts 600. Next, allowances to customer. That is also an expense. You can write to allowances. And I think that is 500. 500. Next, you have returns inward. Returns inward means what? Sales return. So what we are going to do? Sales less return 5,300 minus 1,000. Returns inward. Check sent to branch for rent, wages, salaries. All are expenses. You can take in P&L. To rent. How much is the rent? 1,200. To wages. How much is the wages? 400. To salary. How much is the salary? 1,800. To salaries 1,800. Next, stock on 31st December 2023. Closing stock. So you can write over here by closing stock 26,000. Debtors we don't need. Petty cash including miscellaneous income not remitted 50. How much was petty cash at the starting? 200. How much is petty cash at the ending? 250. That means we got 50 rupees miscellaneous income. So write by miscellaneous income 50. Clear? Now what we are supposed to do is prepare debtors account. Prepare debtors account to find out what is the sales. As a working note, I am preparing debtors account. Branch debtors account. Okay. Now, we don't know what is a credit sale, but what do we know about debtors? Can you see collection on ledger accounts? Collection, that means by bank, debtors account. Okay, money is being received by bank 42,000. Next, goods returned to head office. Goods returned to head office, that is already passed. Bad debts, what will be the entry? Bad debts account debited to debtors. So we'll write over here by bad debts 600. Then we have allowances to customer by allowances 500. Next we have returns inward, that is sales return by sales return 1000. Okay, apart from that, you have closing balance of debtors given 4,000 by balance carried down 4,000, and we know to balance brought down. Opening balance, we know opening balance of debtors is 200. Can you see? When we received so much money, when we had bad debts, when we had allowances, when we had sales return, and there is a balance, where is the money coming from? To sales, balancing figure, credit sales. So 42,000 plus 600 plus 500 plus 1000 plus 4,000 minus 200, 47,900 is the credit sale. So what we will do? Plus 47,900. Cash sale plus credit sale minus sales return. So 5,300 plus 47,900 minus 1,000, 52,200. This will be your sales, 52,200. I don't think there is anything else. Okay, that should be it. So you'll write 2 gross profit carried down, balancing figure 52,200 plus 26,000 closing stock minus 22,000 minus 39,400. 16,800 is your gross profit at the branch. 16,800. As always, they got it wrong. No issues. 16,800. So you'll write over here by gross profit brought down 16,800. Now what you will do? 16,800 plus 50 minus 600 minus 500 minus 1,200 minus 400 minus 1,800. So you have 12,350 to net profit carried forward to P&L account. Net profit carried forward to P&L account. Which P&L? Head office P&L. Till now we are preparing branch P&L. From branch P&L the profit will go to head office P&L. Is this clear? Yes, this should be it. This is the branch trading and P&L account. Let's go further. Question number 3. Question number 3. Okay. Next question. Mumbai head office passes an entry at the end of each month to adjust the position arising out of inter-branch transactions. Okay. During the month. From the following inter-branch transactions in April 2023, make the entry in the books of head office. Inter-branch transactions have happened. Now, in branch accounting, you have to understand one thing. If one branch sends to another branch also, it will be still considered as if branch is sending to head office and head office is sending to the other branch. Okay. What have they told about Jaipur branch? Received goods from Pune branch 9,000 and Ajmer branch 6,000. So, Jaipur branch, if we are taking Jaipur branch, they received goods from whom? They received goods from Pune branch. So, what we have to do now over here, Jaipur branch has received, but we will still pass the entry. Okay, it is going to be routed through the head office. So, Jaipur branch, Kolkata branch and Pune branch. First, everything will be in the books of head office. So tell me one thing, what we are going to do? Received goods from Pune branch. So we'll keep everything open. Pune branch. Okay, Pune branch. Then we have even Ajmer branch. Ajmer branch. Now, received goods from Pune branch. So what we have to do over here? Here it will be plus 9,000 and in Pune branch it will be minus 9,000. But head office only passing entry. Plus 9,000 goods received and minus 9,000 Pune branch. And received goods from Ajmer branch. So here it will be plus 6,000 and Ajmer branch will be minus 6,000. I hope you are getting the calculation. Okay, next, sent goods to Ajmer branch 15,000, Pune branch 12,000. Sent goods, so minus 15,000 for Jaipur. Okay, and it is sent to Ajmer branch, so plus 15,000 to Ajmer. And here Pune branch 12,000, so minus 12,000 for Jaipur and plus 12,000 for Pune because it is going into Pune branch. Received bills receivable from Ajmer branch 9,000. Received bills receivable from Ajmer branch 9,000. Ajmer has to make payment, no? Are you getting my point? So bills receivable they have received. So what happens? Whatever amount they are supposed to get, okay, whatever amount they are supposed to get, that reduces, and for Ajmer branch it becomes bills payable. Clear? Here we can write one by one. This is goods received. This is goods received. This is goods sent. This is goods sent. Clear? Here also it is goods sent and here it is goods received. Here again it is goods sent and then finally goods received. Now, if you are sending goods, you have to get money. Okay, so received bills from Ajmer branch. Ajmer branch has given money. So what will happen now? If goods are received, you are supposed to pay money. If goods are sent, you are supposed to get money. Okay, now bills receivable received. Ajmer branch 6,000. Ajmer branch 9,000. So what will happen? 9,000. Okay, bills receivable. For them it is bills receivable. But for Ajmer branch 9,000 is bills payable. Bills payable. So when you send goods, it will get adjusted with that. Clear? Then sent acceptances to Pune branch and Ajmer branch. Sent acceptance means what? We told that we will pay. Excuse me. Yeah, so 6,000. You're going to write 6,000 bills payable, and for Ajmer branch sent to Pune branch 6,000. So for Pune branch 6,000 is bills receivable. Then Ajmer branch 3,000. So 3,000 is bills payable, and here 3,000 for Ajmer branch will be bills receivable. Can you see how we are recording each thing? Then Kolkata branch, apart from the above, Kolkata branch has come to picture. So that was not there earlier. Kolkata branch. Now understand this. What has Kolkata branch done? Received goods from Pune branch 15,000. Jaipur branch 6,000. Received goods from Pune branch. Pune branch received goods 15,000. So here we are going to write 15,000 goods received, and Pune branch has sent, so 15,000 goods sent. Clear? And then from Jaipur branch, till now we didn't have only Jaipur branch. We had Jaipur branch, sorry. Jaipur branch they have received 6,000. So here we are going to write 6,000 goods sent. This becomes minus. And here we are going to write plus 6,000 goods received. Then finally, Pune branch, apart from the above they said, sent goods to Ajmer branch. Sent goods to Ajmer branch. How much? 9,000. So here we are going to write 9,000 plus goods received. And then here we are going to write minus 9,000 goods sent. Clear? Next, You have received bills receivable from Ajmer branch 9,000. Who received? Pune. So bills receivable 9,000, and for Ajmer it's going to be 9,000 bills payable. Next, received cash from Ajmer branch. Received cash from Ajmer branch. Cash received 5,000, and here it is going to be cash paid 5,000. These are the transactions which we have decoded and we have written it under respective branches. Okay. Now, see what's going to happen here. Jaipur branch has to goods received, so they have to pay 9,000. Pay. Then they received goods again, so they have to pay 9,000 as 6,000. Then they sent goods, that means this has to be received. This has to be received. When they sent goods, they have to get money. Okay. Then 9,000. What are we going to do? Bills receivable. They got bills receivable. So whatever they have to receive minus. Okay. Whatever they have received, receivable minus. Receivable minus. Bills payable. That means whatever they have to pay, that gets subtracted. Whatever they have to pay, that will get subtracted. Bills payable, again, whatever they have to pay, that gets subtracted. And finally, goods sent. Goods sent means they have to receive. They have to receive. Now understand this. What they have to pay? 9,000 plus 6,000. Out of that, they have 9 minus 6,000 minus 3,000. So they have to pay only 6,000. Net amount to be paid is only 6,000. 9,000 plus 6,000 minus 6,000 minus 3,000. So net amount to be paid is only 6,000. Clear? 6,000 to be paid. Now if you see the receivable part, 15,000 they are supposed to receive, 12,000 they are supposed to receive. Okay. And they have received on bills, and 6,000 they are supposed to receive, and they have received on bills receivable minus 9,000. 24,000 is there. Okay, which they are supposed to receive. I hope you're following this. Okay, understand this over here. They are supposed to pay 9 plus 6, 15. So this goes 9. So they are supposed to pay 6,000. Payable, net. If you see the receivable part, they are supposed to get 15, 12 and 6 over here. So 15 plus 12 plus 6, they are supposed to get 33 minus 9,000 bills receivable. 24,000 they are supposed to get. 24,000 they are supposed to get. 6,000 they are supposed to pay. That means net they are supposed to get 24 minus 6, 18,000. So what we will write over here? 18,000. Who is supposed to get? Okay. Pune, Ajmer, Jaipur branch is supposed to get 18,000. Jaipur branch, if you see in all these cases, rupees 18,000 plus. They are supposed to get 18,000. We will give them 18,000 rupees. Jaipur branch. If you see Pune branch, goods sent, so receive. Goods received, so pay. Bills receivable. If you get bills receivable, what will happen? Whatever you are supposed to receive minus goods sent, receive. Goods sent, receive. Bills receivable, whatever you are supposed to receive will minus. Cash, whatever you are supposed to receive will minus. Cash 5,000 they had received. So now what happens? If you see only the received part, they are supposed to get 9,000. Okay, they got bills receivable. Okay, then they are supposed to get 15,000. They are supposed to get 9,000 again. Okay, they got bills receivable of 9,000 and they got cash of 5,000. So 13,000 only they are supposed to get, and one place they are supposed to pay. So 12,000 they are supposed to pay. 1,000 is what they are supposed to get. 1,000 is what they are supposed to get. Pune branch, rupees 1,000 plus. Now again I'm explaining. Okay, understand this. They are supposed to get 9,000. So take 9,000 in your calculator. Receive. They got bills. So remove 6,000. They again sent goods. Add 15,000. They again sent goods. Add 9,000. They got bills receivable minus 9,000. They got cash minus 5,000. 13,000 they are supposed to get. And here they are supposed to pay 12,000. So minus 12,000. 1,000 is the net amount that they are supposed to get. Clear? Now we'll go into the third one. Ajmer branch. Ajmer branch, goods sent means you are supposed to receive money. Goods received means you are supposed to pay money. Bills payable means your payable will reduce. Bills receivable means your receivable will reduce. Goods received means again you are supposed to pay money. You have given bills payable, so payable will minus. Cash paid means your payable will minus. Clear? Now you see what is the situation. Receivable. Okay, receivable 6,000. Receivable 3,000. You can see receivable 6,000, receivable 3,000. Okay, only that much. 9,000 is receivable. 9,000 is receivable. 2 times you sent goods. But payable is 15,000 payable. You gave bill, gone, minus 9,000. Then 9,000 payable, 9,000 bill. So that gets set off. And you paid a cash of 5,000 minus 5,000. 1,000 only you are supposed to pay. Payable is 1,000. Payable is 1,000. Receivable is how much? Receivable is over here 12,000. Are you getting my point? Receivable is 12,000. So here what happens? Total receivable is 12,000. I'm sorry. Receivable is not 12,000. Receivable is 3,000. How are we getting 3,000? Because goods sent 6,000, bills receivable 3,000. So receivable is 3,000. Payable you have to be careful. 15,000 goods we received. So payable 15. Bills payable 9. So gone. So we have 6 remaining. Then this is set off. Then we pay 5. So payable is 1,000. So net will be receivable 2,000. Ajmer branch 2,000 receivable from Ajmer to Ajmer branch. Kolkata branch is very easy. Goods received 2 times. So what will happen if goods are received? You are supposed to get, goods received. Yeah, you are supposed to pay money. You are supposed to pay money. Both the times they have received goods. They have not sent goods to anyone. If goods are sent only, they are supposed to receive money. So Kolkata branch 15 plus 6, 21,000. 21,000 minus. 21,000 minus. That means Kolkata branch has to make payment because they have received goods. If you observed all this now, can you see what is the situation? Kolkata branch has to pay. So Kolkata branch, head office will pass one entry. Kolkata branch account debited 21,000. Kolkata branch has to give 21,000 to Jaipur branch account. Jaipur branch has to get 18,000 to Pune branch account. Pune branch has to get 1,000 to Ajmer branch account. Ajmer branch has to get 2,000. So if you see, Kolkata branch has to give 21,000, which will be received by Jaipur, Pune and Ajmer. So 21 should match. 21 and 20. If you see their solution, no, completely wrong. See, Jaipur 12,000 it seems. Kolkata minus 12. 12 becomes 0. And here 2 and 2. So they have gotten some things wrong because they always merge 2 questions from different places. Okay, they don't have their own questions. They merge questions. So that time this error takes place. So follow this solution. I hope you understood this. In detail, I have shown you the calculation, but the entry is only 1. Entry is only 1 and this entry should always match. I hope it's clear. Let's go further. Question number 4. Yes, you can see the next question is asked from departmental accounts. Mr. P is a proprietor of retail business who has 2 main departments which sells respectively computers and printers. So 2 departments are computer department and printer department. On 31st of December 2023, the balances in the books were as follows. They have given you the balances. Okay. Additional information is also there. Then they have asked you to prepare departmental trading and P&L account and balance sheet. Okay, departmental trading and P&L account and balance sheet. So what we will do, we will keep it ready first. Question number 4. In the books of, in whose books we are preparing this? In the books of Mr. P. Okay, and we are going to prepare departmental trading and P&L account for the year ended. Departmental trading and P&L account for the year ended 31st December 2023. 31st December 2023. Clear? This should be the situation. And what are the two departments we have? Computer and printer. Computer, printer. Computer, printer. Okay, this is the situation. Now, let's go into the additional information, read that and be aware of it and then come back and start solving. Additional information, on 31st December 2023, following amounts were outstanding. Salary, computer and printer, heating and lighting, 20. Okay, so what we have understood in salaries of computer department, okay, 250 and printers 170. Okay, heating and lighting 20. So much is outstanding. Whenever there is outstanding, we can add it. Clear? The general administrative expenses and rent and rates include prepayments. Prepayments means prepaid 33 and 80. So we are supposed to subtract that. Okay. Stock on 31st December, computer and printer given. Closing stock. Okay. Depreciation is to be provided on equipment at 10% on WDV. Okay. That also we know. Then managers of computer and printer department are to be paid a commission of 5% of the net profit prior to commission payment of the respective departments. After you calculate everything, when you have the net profit, 5% will be given to managers. Okay, this is also fine. In apportioning the various expenses between the two departments, due regard is to be given to the following. Number of workers they have given so that we can apportion the wages. Area, average stock level they have given for apportioning the purchases if at all required. Then floor area is also given for rent and other things. General administrative expenses are primarily incurred in relationship to the processing of purchase and sale invoices. Okay, general administrative expenses are primarily incurred in processing purchase and sales invoices. So they have told how to apportion every single thing. Now what we will do, go into the question. Capital will not come here. Where will capital go? Capital will go to balance sheet. Okay, they have asked balance sheet also, but we'll keep that pending. We'll do it together. Sales. You can see the sales of computer department, sales of printer department directly given. So what we will do, we'll go and write by sales. Okay, 59,000 and 29,500. 59,000 and 29,500. Sales. Clear? Purchases also given 20,000 and 10,000. Purchase is also given nicely. So you can write 2 purchases. Computer department 20,000, printer department 10,000. 20,000 and 10,000. Next, you have stock. Stock on 1/1/2023. That means it is opening stock. So what we will do, we will go to the departmental account and write 2 opening stock. Opening stock 2320. 2320 and 2126. 36. 2320 and 2136. I hope it's clear. Then we have salaries. Salaries are there. Where will we put salaries? It will always go into P&L account. So I'm going to write it a little below. 2 salaries. 2 salaries. It is 20,560. But don't forget, there is outstanding salary of computer 250. 20,560 outstanding salary is 250. So what we will do, 20,560 plus 250. So you will take 20,560 plus 250, 20,810. 20,810 computers. Printers, what is happening? 170. So 15,440 plus 170. So 15,440 plus 170, you have 15,610. 15,440 plus 170 outstanding, 2560 plus 250 outstanding. So you have the salaries computed. Clear? Advertising. What are we going to do? They have only given 615. Can you see at the end of the question, they have given information about average stock level, but advertising is not based on stock. Advertising will always be based on our sales. So directly it will be in sales ratio. So you can write over here to advertising, and advertising is how much? 615. So 615 will be in the sales ratio, and our sales ratio is 59,000 and 29,500. You can write in sales ratio 615. So what I will do, 59,000 plus 29,500, I'll take that only as the ratio. 59,000 divided by 88,500 into 615. So you have 410. So it is 29,500 divided by 88,500 into 615, 205. So 410 plus 205, 6115. Advertisement is apportioned. Clear? Then what we are supposed to do? Discount allowed. Directly given 400, 200. So what you will do? Go and write to discount allowed 400, 200. Clear? Next, drawings. Drawings will not come here. It will go to capital. Okay, you can see this is also balance sheet. Drawings also will go to balance sheet. Next, you have building. Building is given at cost. Building is given at cost. Did they tell you anything about depreciation on building? Depreciation on building. Did they tell you depreciation is to be provided on equipment? They said. They never told about building. So building, you're just going to ignore it just like that. It will go straight to balance sheet. Equipment, they have given computers and they have given printer department. Equipment, what is the situation? We have depreciation to be calculated at the rate of 10% WDV. 10% WDV we have to calculate. So we will write to depreciation on equipment. And in bracket you can write at the rate of 10%. So what you will do, you have already the values here, 18,000 and 10,000. This will go to balance sheet, but depreciation will go to P&L. 18,000 into 10% is 1,800 and 7,000 into 10% is 700. Clear? Next, debtors and creditors are there. These also will go to balance sheet. Bank is there. That will also go to balance sheet. Rent and rates is there. Rent and rates. They have not separated it. We have to separate. How will you separate rent and rates? Based on floor area. Floor area, can you see it is there in the ratio of 2:1. So what we will do, go into the material. Okay, see the ratio, then come into the solution. So you can write 2 rent and rates. Rent and rates. Rent and rates 1580. 1580 will be in the ratio of 2:1. How did I get 2:1, guys? Because 8,000 and 4,000. 8,000 and 4,000. So see, again they have messed it up. Hardware and electrical, it seems. Entire question. See, they are merging two questions from different places and making this mistake. We will continue with our same computer and printer, not hardware and electrical. Computer and printer. Suddenly two new departments from where it can come. 2:1. So 1580 into 2 by 3, 1053. And 1580 into 1 by 3, 527. 527. I hope it's clear. Okay. Now, this is the situation. After rent and rates, what do we have? We have canteen charges, 875. Canteen, who is going to use? Workers are only going to use. It can be taken in the number of workers. So you can write over here 2 canteen charges. How much is the canteen charges? 875 875 will be taken in the ratio of workers. Workers are 18 and 12. Workers are 18 and 12. So basically it is 3 is to 2. So 875 into 3 by 5, 525, and 875 into 2 by 5, 350. I hope you got it. Why 3 is to 2? Because workers are 18 and 12. 18 and 12 is in the ratio of 3 is to 2. Next, you can go into the next one. Heating and lighting. Heating and lighting. Did they tell you anything about heating and lighting? General administrative expenses are primarily incurred in relation to the processing of purchase and sale. They said heating and lighting cannot be taken in the workers. We can take it in floor area. Heating and lighting can be taken in the floor area, but we have heating and lighting outstanding 20. So what you will do, you will write to heating and lighting, to heating and lighting 880 plus add the outstanding of 20. 880 plus outstanding of 20, it becomes 900, and this will be in the ratio of 2 is to 1. 900 in the ratio of 2 is to 1. Based on floor area only, we are calculating heating and lighting. So 900 into 2 by 3, 600 and 300. I hope it's clear. Next, after that, what do we have? After heating and lighting, insurance of stock. Insurance of stock. Obviously, it has to be in stock level. Average stock level is given 5,000 is to 4,400. Insurance of stock. So you can write to insurance. Can you see insurance of stock will be based on stock level only. How much stock level you have, that much you will have to pay the premium. So 940. 940 will be in what ratio? 5,000 and 4,400. 5,000 is to 4,400. So basically it's going to be 500 and 440. 500 and 440 for insurance. I hope it's clear. Next, after insurance, what we are going to do? General administrative expenses. General administrative expenses, they said, are primarily incurred in relation to processing of purchases and sales invoice. Processing of purchases and sales invoice, that means we can take in average stock level. General administrative expenses. Oh, general administrative expenses include prepayment. So prepaid is there, and rent also included prepaid. How much is the rent? Where is the rent? Prepaid is there, rent 1580. Prepaid rent has to be removed, minus 80. Then the rent will be in the ratio of 2 is to 1. Floor area 2 is to 1. So 1580 minus 80, 1500 into 2 by 3. So basically it's going to be 1000 and 500. 2 is to 1 ratio. Clear? That is the situation. Then after that, the prepaid rent. See, outstanding, this we have taken, heating and lighting also we have taken. General administrative expenses, prepaid is there. Rent prepaid is there, we have taken. Stock, closing stock. What will we do with the closing stock? It will go into trading account. Go to trading account and write by closing stock. And closing stock, you can see 2,800 and 2,450. 2,800, 2,450. It will go into balance sheet as well. Remember that. Depreciation is to be provided. This is done. Manager's commission, last thing that we have to calculate. In apportioning, these things we have done, and only administrative expenses there. Administrative expenses 2073. Go to P&L and write to general admin expenses 2073. From that, what we are going to remove? We are going to remove the prepaid of 33 minus 33. This will be in what ratio? It will be in stock ratio only. 2073 minus 33 is basically 2040 into 5000. Yes, can you see they have kept this option open to us? General administrative expenses are primarily incurred in relation to the processing of purchase and sales invoice. So what we are going to do, purchase and sales. So we'll take the average stock level. Okay, on the basis of average stock level, purchase and sales, they said. How can we take both the ratios? Okay, purchase and sales. So what we can do is you can use the average stock level for this. Average stock level is 5000 is to 4400. 5000 is to 4400. So 2073 minus 33, 2040 into 5000 divided by 9400, 1085. And 2073 minus 33 into 4400 divided by 9400, 955. 955. So if you check, 955 plus 1085 will be 2040. General administrative expenses are distributed in that way. So everything that is given, we have already taken care of. Okay, all the things we have entered. Now our only job is to calculate to gross profit carried down by gross profit brought down. So you can take 59,000 plus 2,800 minus 2320 minus 20,000. That makes it 39,480. Then 29,500 plus 2450 minus 2136 minus 10,000. 19,814. Bring that down. 39,480. 19,814. Okay. Now what is going to happen? 19,814 minus 15,160. Sorry, 15,610 minus 205 minus 200 minus 700 minus 500 minus 350 minus 300 minus 440 minus 955. 554 is there. 554. Now what we have to do? To commission. To commission. Commission, what did they tell? They said commission will be 5% of the net profit prior to commission payment. So what we are going to do? Commission we are going to write. First 554 into 5%. Into 5%, 28 rupees commission. Then we will write to net profit carried forward to balance sheet. So 554 minus 28 will be 526 rupees net profit. Going into the other department. Okay, computer, 39,480 minus 20,810 minus 410 minus 400 minus 1,800 minus 1,000 minus 525 minus 600 minus 500 minus 1085. 12,350. 12,350 into 5%. 618. 618. So 12,350 minus 618 will give you 11,732. 11,732. This is your final net profit, which will go to balance sheet. They have asked you to prepare balance sheet as well. They have asked you to prepare balance sheet as well. Balance sheet as at what date it is? End of the year. 31st. Okay, sir. They have not given the date, sir. 31st December 2023. Sorry. 31st December 2023. Now, one by one, whatever we have excluded, take capital. So, what we will do? Write capital. And the balance of capital is 71,000. Then what we are going to do? Sales won't come, purchases won't come, stock, opening stock won't come, salaries won't come, advertising won't come, discount allowed won't come, drawings 3,000. So what we are going to do? Minus drawings 3,000. Next, what we are going to do after that? Building is there, drawings is done. Okay, building at cost, it will go straight to the balance sheet. It's an asset. So you can write building. How much is the building? 43,000. 43,000. Then equipment, 18 plus 7, 25. So you can write equipment 18,000 plus 7,000 minus 1,800 minus 700. We have calculated depreciation. 18,000 plus 7,000 minus 10%, 22,500. You can see depreciation is already calculated. Where is depreciation? 1,800 and 700. Next, after that, what do we do? Debtors and creditors. Debtors will go into balance sheet. We can write debtors 10,200. Then we have creditors 5,319. Creditors 5,319. Then we have bank balance over here 5,600. Bank 5,600. Then we have rent and rates, canteen charges, all this is done. Then go into the additional information. Can you see outstanding salary? 250 plus 170 will be 420 outstanding salary. So you write over here outstanding salary 420 rupees. Don't forget that. Then next, outstanding heating and lighting. Outstanding heating and lighting 20 rupees. Outstanding heating and lighting 20 rupees. Prepaid, we have two things: prepaid administrative expense and prepaid rent. So prepaid admin expenses 33, prepaid rent 80. See, you can see that we have removed 80 from rent, and then we have removed 33 from general administrative expenses. Okay, then we have stock. Stock should go to balance sheet. Obviously, stock. Add the 2,800 plus 2,450. 5,250. 5,250. Stock. That is also done. Depreciation is done. Manager's commission. Can you see? We have not paid it yet. Outstanding commission. We have just calculated and kept. So you can take outstanding commission. Go into the calculation. 618 plus 28. 646. 646. This should be your balance sheet. What you are going to add? Net profit. What is the net profit? 11,732 plus 526. 12,258. So 71,000 minus drawings plus 12,258 will make it 80,258. 80,258 will be the situation. Yes, you can check the balance sheet total 86,663. It will tally, it should tally. Okay, this is your departmental trading account, departmental P&L account, okay, and your final balance sheet. Let's check what they have done. They have gotten the numbers wrong. Oh, 86,663. Okay, balance sheet is correct. Profits, they have written 11,471 and 19,814. Profits are obviously wrong, but balance sheet total is correct. Anyways, they had made a lot of mistakes here. Computer, instead of computer, hardware, equipment, electrical and all they had taken. So obviously there will be difference in the situation, but balance sheet will tally. Follow this solution. That was your question number 5. Yes, let's go into question number 5. 4 we had just completed. Question number 5. I think we have solved one of these questions in regular class. Department A sells goods to Department B at profit of 25% on cost. Okay. We have Department A, we have Department B, and we have Department C. Department A sells at 25% on cost. A to B is 25% on cost. Okay. And to Department C at 10% profit on cost. A to C 10% on cost. Next, Department B sells goods to A and C at 15% and 20% on sales. Department B to A is 15% on sales. Okay. And Department B to C is 20% on sales. 20% on sales respectively. Department C charges 20% and 25% profit on cost. Department C charges 20% and 25% profit on cost. Department C to A 20% on cost. Department C to B, okay, A and B 25% on cost. 25% on cost. This is the situation. This will help you as we go further. Department managers are entitled to 10% commission on net profit subject to unrealized profit on department sales being eliminated. First you remove the stock reserve, then you give the commission. Department profits after charging commission but before adjustment of unrealized profit is given. And they've also given stocks lying at different departments as at the end of the year. Transfer from department A to B, department B to C. All the things are given. Find out the correct departmental profit after charging manager's commission. Now, understand this. Computation of departmental profits. Computation of departmental profits. What are the three departments we have? A, B, C. They have given some values, but this value is departmental profit after commission before adjustment of unrealized profit. But they told subject to unrealized profit being eliminated. First you have to remove unrealized profit, then you have to remove the commission. So what has happened? We have to correct that. Profit before unrealized profit elimination after commission. After commission. And this is 36, 27 and 18. 36,000, 27,000 and 18,000. What you will do? Add back the commission. Add back the commission. Here you can calculate 36,000 is after commission, so 90. How much is 10? Obviously it's going to be 4,000. Same thing here, 3,000, and here it is going to be 2,000. So now your profits are 40,000, 30,000 and then 20,000. This is your profit before commission. First what you have to do, from this profit remove the unrealized profit, then remove the commission. You have to remove the unrealized profit first and then remove the commission. So you need one working note for calculation of unrealized profit. Okay, department A, department B, department C. Now understand this. Transfer from department A to A is not possible. Transfer from department A to A, not possible. A to A is not possible. Okay, A to B, 15,000. A to B, 15,000. Lying in different department, they said A to B, 15,000. So now what we have to do here, 15,000 into A to B is at what profit percentage? A to B is 25% on cost. A to B is 25% on cost. So what will be the situation now? 25 by 125. This is on cost, so we have to calculate on sales. 15,000 into 25 by 125, 3,000 is the unrealized profit. A to C, 11,000. 11,000 is A to C. A to C at what profit percentage? Can you see? 10% on cost. A to C. So this becomes 10 by 110. So 11,000 into 10 divided by 110 will give you 1,000. 1,000. Then transfer from department B. Department B to department A, 14,000. 14,000. Department B transfers to department A at what profit percentage? 15% on sales. Directly percentage is given on sales. So what we can do, 15% on sales. So directly you will take into 15 by 100. 14,000 into 15%, 2,100. B to B is not possible. B will not transfer to themselves. B to C is how much? 12,000. B to C is 12,000 into B to C at what profit percentage? Can you see over here? B to C at 20% on sales. So you can take 20 by 100. So 12,000 into 20 by 100 will be 2,400. I hope it's clear. Now transfer from department C. Department C to A 6,000. Department C to A 6,000. Now you have to go and check the chart. C transfers to A. C transfers to A at 20% on cost. 20% on cost. So what we will do? We will write 20 by 120. So 6,000 into 20 by 120 will be 1,000 rupees. C to B. C to B 5,000. C to B 5,000 is transferred and is still there in the closing stock. C to B at what percentage? 25% on cost. Can you see 25% on cost? Yes. So 25 by 125. So 5,000 into 25 by 125 will be 1,000 again, and C to C is not possible. Now what you have to do? From department A, what is transferred? Unrealized profit for department A is 4,000. 3,000 plus 1,000. So unrealized profit of department A is 4,000. So minus unrealized profit 4,000. Clear? If you check department B 2,100 and 2,400. So 4,500. Department B. If you check department C, 1,000 and 1,000. So much is the unrealized profit for department C. So 2,000. When you remove this, you will get 36,000. You will get 25,500 and you will get 18,000. Now you have to remove the 10% commission. Commission was removed before unrealized profit. So we added back the commission. Now we are going to subtract the commission minus commission at the rate of 10%. This will be 3,600. This will be 2,550 and this will be 1,800. So now you have your departmental profits. 36,000 minus 3,600, 32,400, and here you have 25,500 minus 2,550, 22,950, then 1,800, 18,000 minus 1,800, 16,200. This will be your situation. Computation of departmental profits. Are you following this? Yes. First, what we are going to do, keep a chart ready so you know all the profits. Then you can compute departmental profits. What they did, first only they have removed commission. So you're going to add back the commission. Then you are going to calculate unrealized profits of each department. Remove the unrealized profit. Then you calculate the commission. That will be the correct way to do it. Clear? 32,400, 22,950, 16,200. Yes, this is correct from their side as well. Okay, we have one more unsolved case and then we have to see the past examination questions of this particular chapter. Yes. Yes, let's go into the next question. Let's go into the unsolved case. Okay, unsolved case. Messrs. J Traders, a manufacturer of ceramic utensils, has been in business for last 36 years. They're in business for last 36 years. In the year 1617, it decided to open a branch for cater to their customers in the eastern part of India. Okay, they are there in business since last 36 years. They are starting a branch now. It was decided by the senior management members to open the branch at Patna. So it's going to be a Patna branch. The Patna branch ultimately started its operations from January 1st, 2018. Over the years, its business gradually grew in eastern states of the country. The following particulars relates to Patna branch for the year ending 31st March 2023. Okay, they have given the balances on 1st April 2022, stock, debtors, petty cash, furniture, and prepaid fire insurance. 5 balances we have, and also we have outstanding salary. Still here, everything is opening balance. After that, you have goods sent to branch, cash sale, credit sale, cash received from debtors, cash paid by debtors directly to head office, discount allowed, cash sent to branch for expenses. They have sent for all these expenses, rent, salaries, petty cash, insurance premium for a longer duration. They have paid, okay, for 2 years. So 1 year will be considered as prepaid and the other will be considered as expense. Then goods returned by branch, goods returned by debtors, stock at branch, closing balance 31st March 2023. And then petty expenses paid by the branch 2850, loss of stock by fire 4,800. It is a policy of the organization to provide Depreciation on furniture at the rate of 10% per annum. Determine the amount due from branch debtors at the end of the financial year. Ascertain the amount of profit or loss at Kanpur branch for the year ending by preparing branch account in the books of Jaipur head office. So what they want you to do, this is not stock and debtors method like how we solved in the previous question. This is debtors method. So unsolved case. Unsolved case. In the books of J traders. In the books of J traders. In the books of J traders. Now you can have Patna branch account. In the books of J traders, you need Patna branch account. Patna branch account. Okay, let's start from beginning. Whatever they have given, opening balances are there. So you will write to balance brought down, and under that, first thing is stock. To balance brought down, first thing is stock 40,000. Stock 40,000. Debtors 14,000. You can write debtors 14,000. Then you have petty cash 1,500. So you can write petty cash 1,500. Then you have furniture 12,000. Furniture 12,000. Then you have prepaid insurance premium. That is also an asset. You can write prepaid insurance 1150. 5 items. Then you have outstanding salary. Outstanding salary is a liability. So you'll have to write it as by balance brought down. And under that you'll write outstanding salary. Outstanding salary 2,100. 2,100. Okay. Next, goods sent to branch 2,80,000. So what you're going to write? Branch account debited to goods sent to branch account 2,80,000. Next, cash sales 3,30,000. What is the entry for cash sales? It's a transaction between the branch and its customer. So we don't have to worry about it. Cash sales, no entry. Credit sales, no entry. Cash received from debtors, for that also there is no entry because it's a transaction between branch and customer. In the debtors method, we only record transactions between head office and branch. Cash paid by debtors directly to head office. Cash paid by debtors directly to head office. Entry will be bank account debited to branch debtors account. Okay, bank account debited to branch debtors account. This also we are going to ignore. Discount allowed. Discount allowed 1,100. This is also a transaction between branch and its customer. Cash sent to branch for expenses. Now here what we are going to do, cash sales, credit sales. Cash received from debtors. So these two amounts and this amount we are going to take it. Okay, because amount is received by head office. So we are going to write bank account debited to branch account. So here I am writing by bank account. What are we getting? 3,30,000 from our cash sales. 3,30,000 from our cash sales. And then 1,35,000 from debtors. 1,35,000 from debtors. Plus 22,000 cash paid by debtors directly to head office. So 22,000 from debtors directly. So 3,30,000 plus 135 plus 22,000. 4,87,000. 4,87,000 is what we have received. Discount allowed is not going to be considered. It's a transaction between branch and its customer. Cash sent to branch for expenses. For rent, salary, petty cash, insurance premium, all that we have sent money. Insurance premium or all that we have sent money. So what is going to be the situation here? We are going to write branch account debited to bank account. Branch account debited to bank account. Petty cash is 4,000. So what is the amount that we have sent? Okay, 1,200 So 12,000 for rent. Okay. 5,400 for salary. 5,400 for salary. Then we have sent petty cash 4,000. So petty expenses 4,000. Then we have sent insurance premium. Insurance premium is how much? Prepaid insurance premium 1150 is there. Okay, 1150 is this year's. Okay, already it is prepaid. That means it is sent on previous year only. Can you see over here? Prepaid fire insurance premium over here. Already it was sent in the previous year, because see, prepaid insurance premium from 1/4/2021 to 31st of March 2023. So 21-22 and 22-23, 2 years insurance premium amount is sent. When is it sent? It is already sent in the previous year. That's why we have prepaid in the previous year. So we don't have to worry about that. So total amount is 12,000, 5,400 plus 4,000, 21,400. 21,400. Goods returned by the branch. Goods returned by the branch. What should be the entry? Goods sent to branch account debited to branch account. So you are going to write over here, by goods sent to branch account. Goods returned by the branch is 4,000. Goods returned by debtors, that is not going to be bother us. Stock at branch on 31st of March 2023. So you're going to write by balance carried down stock. How much is the stock? Stock is going to be for goods stock 38,000. 38,000. Petty expenses paid by the branch. Petty expenses paid by the branch. So what will be the petty cash balance now? Petty cash balance will be, opening we had 1,500. We sent them 4,000 minus petty expenses paid by the branch is 2,850. So 1,500 plus 4,000 minus 2,850. You have petty cash balance of 2,650 remaining. Debtors we need to calculate. We need a working note to calculate debtors. Then what do we need? Furniture. Furniture we need to find. What did they tell about furniture? Can you see? It is a policy of the organization to provide depreciation on furniture at the rate of 10% per annum. Petty expenses done. Okay, now 10% furniture. They are going to calculate depreciation. So what is the furniture balance here? 12,000. So you're going to write 12,000 minus 10%. So 12,000 minus 10%, 10,800. That is the furniture balance. After furniture, the next thing is loss of stock by fire, 4,800. So what we are going to do? We are going to write over here, by abnormal loss. Abnormal loss 4,800. So literally we have completed everything. What are the transactions that we have skipped? Goods sent to branch is taken. Cash sales, credit sales are not going to be considered. Cash paid to debtors not going to be considered. Discount allowed also not going to be considered. So now only thing that we are supposed to do is working note for debtors. What was the opening balance of debtors? Opening balance of debtors starting of the year, you can see 14,000 opening balance, 14,000 plus credit sales, plus credit sales. Can you see what is the credit sales over here? Credit sales is 1,83,000. So 1,83,000 credit sales. Then what we are going to do? Cash received from debtors minus amount received, 1,35,000 amount received. Cash paid by debtors directly to head office minus amount received by head office. That is going to be 22,000. Then you have discount allowed. Discount allowed. Discount allowed is 1,100. 1,100. Then you have goods returned by the debtors, 7,000 minus goods returned, 7,000. That should be it. Okay, have a look at it again. You have debtors opening balance given in the question. Debtors opening balance is 14,000. Okay. Plus credit sales 1,83,000. Minus amount received 1,35,000. Minus amount received by head office 22,000. Minus discount allowed 1,100. Then there is sales return of 7,000. This should be your closing balance of debtors. Closing balance. So take your calculator. 14,000 plus 1,83,000 minus 1,35,000 minus 22,000 minus 1,100 minus 7,000. So 31,900 is your closing balance. 31,900 is your closing balance. So go and write 31,900. That should be your closing balance of debtors. Clear? Now what is remaining? Only thing that is remaining is find your profit. To net profit carried forward to P&L account. Transfer it from here to head office P&L. So take your calculator. 2,100 plus 4,87,000 plus 4,000 plus 4,800 plus 38,000 plus 2,650 plus 31,900 plus 10,800 minus 40,000 minus 14,000 minus 1,500 minus 12,000 minus 1,150 minus 280 minus 21,400. You get 2,11,200. 2,11,200 is your net profit carried forward to P&L. Both the things that they have asked in this question we have covered. They have asked what is the net profit carried forward to P&L, that is also covered. And then they have also asked you the closing balance of debtors, that also has to be worked out. Yes. Yes, let's continue. Now we'll go into the examination question, December 2023. December 2023 examination question, they have asked from branch accounts 7 marks. 7 marks from branch accounts is asked in December 2023. Okay, so December 2023, it is 6A, question number 6A. They have asked it for 7 marks and it was straight up from branch accounts. Straight up from branch accounts they have asked 7 marks. Okay, X Limited has a retail branch at Puri. Goods are sold at 60% profit on cost. 60% profit on cost. The wholesale price is cost plus 40%. Okay, 60% profit on cost. Wholesale price is cost plus 40%. So if I take cost as 100, okay, add 40%, you get 140. This becomes the wholesale price. Okay, then you're going to add 60% profit on cost. So you're going to add 20. So this is your 160. This is the selling price. 160. So finally 160 is the selling price. Goods are invoiced from Delhi head office to branch at Puri at wholesale price. That means you're going to send it at 140. From the following particulars, ascertain profit made at head office and branch for the year ended 31st March 2023. Okay, they have given the stock, purchases, goods sent to branch at invoice price, sales, stock, closing stock, expenses. Sales at head office are made only on wholesale basis and the branch at branch only to customers at retail price. So we are selling it at wholesale price and branch is selling it at customers at retail price. Stock valued at head office is valued at invoice price. Okay, this is it. This is what you are supposed to calculate. Okay, now we want to know, ascertain the profit made at head office and branch for the year ended. So they're telling what is the head office profit and what is the branch profit. Now, what we can do is prepare a trading and P&L account. Prepare trading and P&L account for the year ended 31st March 2023. And what we can do is have a head office column, have a branch column, head office column and branch column, so that they can clearly get to know what is the profit. Okay, head office and branch column. Can you see stock at head office is valued at invoice price. Invoice price is selling price. Okay, and sales are made by head office only on wholesale basis, and that at branch only to customers at retail price. So head office is valued at invoice price. What is the invoice price? Cost is 100, profit is 40% cost, that is the wholesale price. Goods are invoiced from Delhi head office to branch at wholesale price. They are invoiced at wholesale price. So invoice price means here it is going to be wholesale price. Then branch will sell it to customer at retail price. That is 60% on cost. Goods are sold at 60% profit on cost. So it becomes 160 when it goes to selling. Okay, this should be it. So what you will do? You will show to opening stock. To opening stock, head office has 7 lakhs. 7 lakhs and branch has nothing. Head office 7 lakhs, branch has nothing. So what you're going to do now? Next, this stock, it is at what price? It is at invoice price. Because it is at invoice price, in your P&L, you're going to write by stock reserve. By stock reserve. Invoice price means wholesale price. What is the wholesale price? 140. So 40 by 140 you have to calculate. 7 lakhs into 40 by 140. So 2 lakhs. 2 lakhs will be your opening stock reserve, which is getting reversed. Next, you have purchases 42 lakhs. So you can write 2 purchases 42 lakhs. Okay, then goods sent to branch at invoice price. Goods sent to branch at invoice price. So you can write 2 goods sent to branch account. Branch will take it at 15,12,000. And here you're going to write by goods sent to branch account. Head office will take it at sales 15,12,000. Clear? Next, sales 42,84,000. You can write by sales 42,84,000. Okay, don't get confused. They have told sales at head office are made only on wholesale basis, and that at branch only to customers at retail price. And sales at head office is valued at invoice price, and you can see goods are invoiced from Delhi to Puri at wholesale price. So invoice price means wholesale price. Clear? 42,84,000, 15,12,000. Next, there is also sales over here, 14,40,000. Branch is also making sales, 14,40,000. Clear? Then you can see stock on 31st March 2023, that is closing stock, 16,80,000. So you can write over here by closing stock 16,80,000, and then it is 2,52,000. 2,52,000. So now what you're going to do? 16,80,000 is sitting here, 2,52,000 is sitting there. So here also you need 2 stock reserve. 2 stock reserve. So 16,80,000 into 40 by 140, 4,80,000. And here 2,52,000, 72,000. Okay, everything is 40 by 140. 40 by 140 because 40% is a profit percentage on the invoice price. Next, when we go further, you have 2,52,000. This is sorted. Expenses 80,000 and 40,000. So you're going to write 2 expenses 80,000 and 40,000. That should be it. We don't have anything else. Now you calculate 2 gross profit carried down, and here you will write by gross profit brought down. By gross profit brought down. So 15 lakh 12,000 plus 42 lakh 84,000 plus 16 lakh 80,000 minus 7 lakhs minus 42 lakhs. You get 25 lakh 76,000. 25 lakh 76,000. And when we go into branch, it is 14 lakh 40,000 plus 2 lakh 52,000 minus 15 lakh 12,000. 1 lakh 80,000 is the gross profit. So 25 lakh 76,000 and 1 lakh 80,000. Then you can write over here 2 net profit carried forward. You can find the net profit here. 1 lakh 80,000 minus 40,000 minus 72,000. 68,000. 68,000. And 25 lakh 76,000 plus 2 lakhs minus 80,000 minus 4 lakh 80,000. 22 lakh 16,000. This should be your profit. This is your trading and P&L account for head office as well as branch. What you have to understand here, the head office goods are at invoice price, so you have to create stock reserve. Here the head office goods and branch goods both are at invoice price, so you have to remove the profit, so you'll have to create the stock reserve. That is one thing that you have to understand, and stock reserve will be 40 by 140 because 40% on cost. That should be it. That is your question from December 2023. Let's go into the next question. This June 2024. In June 2024 also they have asked one question 6A from branch accounts for 7 marks. You can see after that there is nothing much. Higher purchase is there. Incomplete records we have done. Partnership also is done. Stores, branch accounts, fire insurance, provisions. Yes, that should be it. So branch accounts, again they have asked 6A. Okay, again they have asked June 2024. 6A. 7 marks. 6A, it is for 7 marks. Okay, now you can go into the question. Ranu Stores of Jaipur has a retail branch at Kota. The goods are invoiced to the branch at selling price, which is obtained by adding 50% to the cost. Cost plus 50% is your selling price. All expenses are paid by head office. Okay, dependent branch. Particulars are as follows. Let's go and see what they have asked. You are required to prepare branch stock account, branch debtors account, goods sent to branch account, branch expenses account, branch adjustment account, branch stock reserve account in the books of head office. They have asked you to prepare all these things in the books of head office. Now you can write in the books of head office. Who is the head office here? Head office is Ranu Stores of Jaipur. In the books of Ranu Stores. Okay, you have to prepare one by one. Let's see what and all they have asked. Branch stock account they have asked. So you need to prepare branch stock account. Then obviously you need branch adjustment account. The next ledger that they have asked is branch adjustment account. Then you need branch debtors account. Branch debtors account. Then you need goods sent to branch account. You need goods sent to branch account. After that, you need branch stock reserve account. Branch stock reserve account. These are the ledgers that they have asked you to prepare. Branch expenses is also there. Okay, branch expenses also they have asked. Branch P&L is one thing that they have not asked. So you will need branch cash account is not asked. Branch expenses account is asked. So you can see over here branch stock account, branch debtors account, goods sent to branch account, branch expenses account, branch adjustment account, and branch stock reserve account. 6 ledgers they have asked. Yes. Let's begin reading the question. As you read the question and finish the question, you should finish with the solution as well. Branch balance on 1st April 2022. Stock at invoice price 1,20,000. So you can write over here to balance brought down 1,20,000. This is at invoice price. Because this is at invoice price, what you have to do? Automatically branch adjustment account will have a balance. Branch adjustment account or stock reserve account will have a balance by balance brought down stock reserve. It is at invoice price. So what we will do, because they have asked you to prepare stock reserve will be kept separate. Otherwise, adjustment only will be stock reserve. Okay, 50% of cost. So now this is going to be 1,20,000 into 50 by 150. 1,20,000 into 50 by 150, 40,000. 50 by 150, 40,000. Is this clear? Next, debtors 43,200. Debtors 43,200. Branch debtors, you can write to balance brought down 43,200. Next, goods sent to branch invoice price 18 lakhs. Goods sent to branch invoice price 18 lakhs. So what we are going to do, 18 lakhs is invoice price. So 18 lakhs into 50 divided by 150 will be 6 lakhs. So you'll write branch stock account debited to goods sent to branch account. This will be at 12 lakhs cost. This will be at 12 lakhs cost. Then you're going to write to branch adjustment account. Branch adjustment account 6 lakhs. This is 12 lakhs into 50 by 100 because cost. Okay, 6 lakhs. And here you're going to write by branch stock account. By branch stock account 6 lakhs. By branch stock account 6 lakhs. And then you're going to write by branch stock account 12 lakhs. This is the entry. What is the entry? Branch stock account debited to goods sent to branch account. Branch stock account debited to branch adjustment account. This is the situation. Stock reserve, what you will do? To branch adjustment account 40,000. Remove 40,000. Last year's stock reserve. This year it's going to be profit. So here we are going to write by branch stock reserve 40,000 transferred. Clear? Now, next what we are going to do, goods into branch done. Goods returned by branch at invoice price. Goods returned by branch. So again what we are going to do, branch stock, goods sent to branch account debited to branch stock account 24,000, okay, into 24,000 is 150. So what we are going to do, 50 by 150, if you do, 8,000 is removed. So this is going to be 16,000. And here we are going to write to branch stock account 16,000 into 50 by 100. This will be 8,000. And then we can write in branch stock account by branch adjustment account 8,000 by goods sent to branch account 16,000. Simple. When you are sending the goods at invoice price, what is the entry? Branch stock account debited. Branch stock account debited to goods sent to branch account at cost to branch adjustment account profit portion. When it is returned, what should be the entry? Branch goods sent to branch account debited at cost. Branch stock account, branch adjustment account debited for the profit portion to branch stock account, the entire amount 24,000. Clear? Next, we go further. Cash sales. Cash sales 72,000. What should be the entry? Branch cash account debited to branch stock account. So you're going to write by branch cash account 72,000. Next, We have credit sales 16,32,000. 16,32,000. What you are going to do for credit sales? Branch debtors account debited to branch stock 16,32,000 by branch debtors 16,32,000. Branch debtors account debited to branch stock account 16,32,000. I hope this is clear. Next, goods returned by debtors. Sales return. Goods returned by debtors. So what we are going to do? Branch stock account debited to branch debtors account. Branch stock account debited to branch debtors account 12,000. And here we can write by branch stock account 12,000. Next, cash received from debtors. Branch cash account debited to branch debtors account. So you're going to write by branch cash account, cash received from debtors 15,60,000. 15,60,000. Next, you have discount allowed to debtors. Discount allowed to debtors, what you're going to do? Branch expenses account debited to branch debtors account. Branch expenses to branch debtors 12,000. And here you're going to write by branch expenses 12,000. Next, bad debts. Bad debt is also an expense. So you're going to write branch expenses account debited to branch debtors account 2,400. Branch expenses to branch debtors 2,400. Go to branch debtors and write by branch expenses account 2,400. Next, you have branch expenses paid by head office. Rent, salary and miscellaneous expense. So you can just total these three. 19,200 plus 1,01,000 plus 6,000. 1,26,200. So the entry will be branch expenses account debited to bank account 126,200. This is the expense that is incurred, but it is paid directly by the head office. Okay, 1,01,000 plus 19,200 plus 6,000. Next, balance as on 31st March 2023. Stock at invoice price 199,200. 199,200. They are given the closing stock. So you're going to write by branch balance carried down 199,200. This is at invoice price itself. This is at invoice price itself. Clear? Then what did they give us information? Debtors balance is also given 88,800. Go to branch debtors and write by balance carried down 88,800. Okay, this should be the situation. Now what you're going to do? Branch stock. Let's see the branch stock. What is the situation? 8,000 plus 16,000 plus 72,000 plus 16,32,000 plus 199,200 minus 1,20,000 minus 12 lakhs minus 6 lakhs minus 12,000. You have 4,800 of loss. So you can write by branch adjustment account 4,800. And here you can write to branch stock account 4,800. You can have a look at it again. 8,000 plus 16,000 plus 72,000 plus 16,32,000 plus 199,200 minus 12,000 minus 12 lakhs minus 6 lakhs. Wait 1 second. 8,000 plus 16,000 plus 72,000 plus 16,32,000 plus 199,200 minus 12,000. Sorry, minus 120,000 minus 12 lakhs minus 6 lakhs minus 12,000. 4,800. It's correct. Yes, we have a shortage or deficit over there that is transferred to branch adjustment account. Now, what we are going to do with branch adjustment? To end of the year, closing stock is at invoice price 199,200. So what you are going to do? To branch stock reserve. to branch stock reserve 199 200 into, what is the profit percentage in this question? 50%. So you're going to take it as 50 by 150. 50 by 150. So 199 200 into 50 by 150, 66,400. And here we are going to write by branch stock account, branch adjustment account, 66,400. So here we are going to write to balance carried down 66,400. To balance carried down 66,400. Is this clear till here? Branch stock reserve. Any doubt? Opening stock reserve is reversed. Closing stock reserve is created. Stock reserve is created on the closing stock. That should be it. Branch stock account is automatically closed. We have transferred. Branch adjustment account. What are we going to do now? Check 6 lakhs plus 40,000 minus 8,000 minus 4,800 minus 66,400. So 560,800 will be transferred to branch P&L account. Balancing figure 560,800 will be transferred to branch P&L. 40,000 plus 6 lakhs minus 8,000 minus 4,800 minus 560,800 minus 66,400. Yeah, that should be it. 560,800. Branch debtors, what you are going to do? They have already given the balance carried down. Just check once. 43,200, 16,32,000 minus 12,000 minus 15,60,000 minus 12,000 minus 2,400 minus 88,800. Yes. So closing balance is matching. Debtors balance is matching as per what they have given. Here, goods sent to branch. What we are going to do? It will be transferred to trading account. Goods sent to branch will be end of the year. It will be transferred to trading account. So you can just take it as 12 lakh minus 16,000, 11 lakh 84,000. Next, branch stock reserve is anyways closed. Branch expenses will be closed when you transfer it to branch P&L. So you can write branch P&L account 12,000 plus 2,400 plus 126,200. 1,40,600. 140,600 will be transferred to branch P&L. This is your question for 7 marks. See, branch stock account. Deficit is transferred to branch adjustment. Branch adjustment account. Profit goes to branch P&L. Branch debtors. Balancing figure is given. Goods sent to branch. Balance will go to trading account. Branch stock reserve given. Branch expenses. Branch stock reserve will be on opening stock and closing stock. Adjustment you have to do because it is at invoice price. Branch expenses account is also, expenses are given. Some are paid by branch, some are paid by head office, some are bad debt, some are discount. All this is there. Everything will go to branch P&L. With that, we are done with the June 2024 question as well. So from the chapter 6, all the questions, unsolved case and the past examination questions we have completed. Yes, all the best for your exam. See you in the next video. Yes, good morning. Let's go to the next chapter, that is fire insurance. Fire insurance, we have loss of stock, loss of profit, both of them. Same procedure will follow. We'll solve all the comprehensive problems, that is practice problems which are given. In fire insurance, they have not put any unsolved case, so no unsolved case. So then we'll go into the past 2 examination papers. Okay. Yes. Let's go into the first one. First question. From the following information, calculate the amount of claim for loss of stock with the insurance company B Limited. They are asking you what? Loss of stock calculation. Okay. Purchase for the year 2022 is given. Sales for the year 2022. Purchase from 1/1/2023 to 36/2023, 6 months. Sales for that period. Stock on 1/1/2022 and stock on 1/1/2023. All this is given. You are informed that in 2023, the purchase price raised by 20% above the level prevailing in 2022. In 2023, purchase price is more. Okay. In 2023, sale prices hiked by 10% over the level prevailing in 2022. Okay. That also is fine. Salvage value of stock, 20,000. salvage value is there. Fire insurance policy for 148,750 to cover the loss of stock by fire is given. Okay, now what we are supposed to do first, we need the gross profit percentage, correct? Gross profit percentage. So first thing that we are going to do is go to the question number 1. First thing we are going to do is go and calculate previous year's profit. So what I'm going to do is first always prepare trading account for 2022. They have given the information for 2022. Take the trading account for 2022. So now 2022, can you see stock on 1/1/2022 given 1,35,000. So you can write to opening stock 1,35,000. This is the stock. Clear? Next, what we are going to do, purchases for 2022 9,15,000. So you can write to purchases 9,15,000. Then what do we have? Do we have any direct expenses, wages, anything? Nothing. Nothing is mentioned. Sales for the year 2022 12 lakhs. So you can write over here by sales 12 lakhs. 12 lakh is the sale. Next, what they have asked, nothing related to 2022. 2022 closing stock is nothing but opening stock of 2023. So you can write over here by closing stock. Closing stock is 1,50,000. 1,50,000. So you have opening stock, purchases, sales, closing stock, all the 4 given. Now what you are going to do, automatically you will get the gross profit. This will be your balancing figure. Gross profit will be your balancing figure. So what you will do, 12 lakhs plus 1,50,000 minus 135 minus 9,15,000. So 3 lakhs is your gross profit. Therefore, the gross profit percentage should be 3 lakhs divided by 12 lakhs into 100. So 3 lakh divided by 12 lakhs into 100 will be 25% is your gross profit percentage. Okay, that was the gross profit that was earned in the previous year. Now what we are supposed to do? See, 36,2023 they are telling. Okay, if you see sales, there is again a date issue. Sales from 1/1/2023 to 36/2023. Purchase also from 1/1/2023 to 36/2023. They have given the information. Now in 2023, purchase price raised by 20% above the level prevailing in 2022. They are telling it is more. 2023, the selling price is hiked by 10% more. Okay, so what we are supposed to do, when we are supposed to calculate loss of stock, first thing we always do is memorandum trading account for the period 1/1/2023 to 36/2023. We are preparing memorandum trading account for the period 1/1/2023 to 36/2023. That is one thing. Okay, now what we are supposed to do, opening stock. What is the opening stock? We already know the stock on 1/1/2023 1,50,000. So you will write to opening stock 1,50,000. Clear? You have the opening stock. Purchases for this period, they have given purchases is 8 lakhs. Okay, so you can write to purchases 8 lakhs. Then sales for this period, that is also given 9,90,000. You can write by sales 9,90,000. Then by closing stock, this we don't know. We need the closing stock on the date of fire. If you know the closing stock on the date of fire, then you can go ahead and calculate everything else. Okay, so what should be the gross profit? If you see, if you take a working note, in 2022, okay, in 2022, if the sale is 100 rupees, the profit was 25%. So profit is 25 rupees. So 75 is your cost. Correct? Cost is 75 rupees. In 2023, what has happened? in 2023, sale price has increased. So sale price has increased by 10%. So 100 plus 10%. Sale price is now 110. Profit we don't know. Cost, we can take the cost. Cost was 75, but you can see over here, purchase price is raised by 20% during the level prevailing in, above the level prevailing in 2022. So plus 20%, 75 plus 20%, that makes it 90. So sale price is 110, cost is 90, therefore profit balancing figure is 20. Therefore gross profit percentage, gross profit will be 20 out of 110 and 20 out of 90 if you want on cost. Earlier it was 25 out of 100 and 25 out of 75. So now what you're going to do, 9,90,000 into 20 by 110. So 9,90,000 into 20 by 110. So your gross profit is 1,80,000. When you have gross profit of 1,80,000, what you can do, 1,80,000 plus 8 lakhs purchases plus 1,50,000 minus 9,90,000. So closing stock 1,40,000. So what you're going to do, computation of claim. When you're doing computation of claim, we have done it in our regular videos. When you're doing computation of claim, closing stock on date of fire. Closing stock on date of fire 1,40,000. We know that closing stock on the date of fire is 1,40,000. Can you see salvage stocks? Stock salvaged minus stock salvaged goes to 20,000. So now you have 1,20,000. This is loss of stock by fire. Loss of stock by fire. What was the policy amount? 148,750. Policy amount is 148,750. So actually closing stock on the date of fire is 140. Therefore, you can write, therefore, as the policy amount is greater than closing stock on date of fire, as the policy amount is greater than the closing stock on date of fire, average clause is not applicable. They have gone wrong in the solutions again. Okay, average clause is not applicable because I have stock of 140. Okay, my policy amount is 148 something, 147 something, 148,750. So average clause is not applicable. Average clause is applicable when closing stock on the date of fire is more than the policy amount. Okay, therefore the claim will be policy amount is 148,750, 148,750, or the loss is 1,20,000, whichever is less. Therefore claim is equal to 1,20,000. Therefore claim is equal to 1,20,000. This is your computation. Okay, this is your computation. First you have to find the gross profit percentage, then you have to find the memorandum trading account. Okay, then you have to proceed further. Yes, let's go further. Next question, question number 2. Question number 2, you can see, next one. X and Co suffered a loss of stock due to fire on 31st of March 2023. On 31st of March 2023, exact on the year end date, they have incurred fire. Okay, from the following information, prepare a statement showing claim for the loss to be submitted. Again, 2023, we need gross profit percentage. So they have given purchase of 2022, sale of 2022, purchase for the affected period, sale for the affected period, and stock on 1/1/2022 and stock on 1/1/2023. All this information is given. An item of goods purchased in 2021 at a cost of 20,000 was valued at 12,000 on 31st of December 2021. That means they have undervalued. Half of these items were sold during 2022 for 5,200 and the remaining stock was valued at 4,800 on 31st of December 2022. That means what they have done, undervaluation in opening stock, undervaluation in closing stock. 1/4 of the original stock was sold for 2,800 in February 2023 and the remaining was valued at 60% of the original cost. Oh, ho, ho. With the exception of this item, the rate of gross profit remained fixed. The stock salvaged was estimated at 24,000. Insurance policy was valued for 3 lakhs. All this they have given. Now, what we are supposed to do first thing we will prepare trading account of 2022. First thing is trading account for 2022. Okay. Here what we have to do, we have to normalize everything. What is the opening stock? 76,800. So to opening stock 76,800. But what we have to understand is an item was purchased in 2021 at a cost of 20,000. It was valued at 12,000 on 31st of December 2021. That means 8,000 they have reduced. So what we are going to do, add that 8,000 back. 76,800 plus 8,000, 84,800. Are you following? We are in 2022, 1/1/2022. So now what happens? Something they have done in 2021, 31st of December 2021. Last year's closing stock was reduced. So this year's opening stock also will be reduced. So we are going to add it back. Half of these goods were sold during 2022 for 5,200. Okay. And the remaining stock was valued at 4,800. Remaining stock is valued at 4,800. So what we have to worry about? Okay. We will take the purchases of 2022. No problem there. So you can write 2 purchases, 3,20,000. Then we are taking sales, buy sales 4,05,200, buy sales 4,05,200. Then we want the closing stock, buy closing stock. Okay. So now what happens? Closing stock is how much? Closing stock on 1/1/2023 is 63,600. So 63,600. But half of the goods remaining stock was valued at 4,800 on 31st of December 2022. Half of the goods. So what we should worry about? 63,600. They have reduced the closing stock value also. What have they done here? Now understand this. Understand this, very important. The goods value was 20,000. 20,000. This was taken down to 12,000. So here we have a loss of 8,000. And this was on 31st of December 2021. So therefore 1/1/2022. What did we do? We added that 8,000 back. We added because we want a normal. We want to see what is the normal gross profit percentage. We added 8,000 back. Then what happened? Out of this 12,000, half is sold and other half is there in closing stock. So actually it is 6,000 and 6,000. Basically it is 10,000 and 10,000. Okay. So now what we are going to do? Half is sold during the year for 5,200. Okay. Sold. This is the cost of it. Sale value is 5,200. They sold it for 5,200. Okay. Then other half, what did they do? Other half was remaining. It is valued at 4,800. Valued at 4,800. Again 1,200 went down. Again 1,200 went down. So now what is going to happen? Okay, closing stock. How much should we add? They have taken it as 4,800. But remember, our closing stock is 20,000. 20,000 closing stock. We are going to bring it everything to normal only. 20,000 closing stock is taken as 4,800. So here actually the difference between 20,000 and 4,800, what we are going to do is understand this. Okay, this is going to be 5,200 reduction. Add that 5,200 back to closing stock. So 63,600 plus 5,200, 68,800 is your closing stock. Now you get your gross profit. To gross profit carried down, balancing figure. 68,800 plus 4,05,200 minus 84,800 minus 3,20,000 purchases. So 69,200 is your gross profit, which is balancing figure. So what we have to understand now, our sale is 4,05,200. In this we have normal sales and we have abnormal sales. We have normal sales in this and abnormal sales. What is the abnormal sales? Selling this for 5,200 is abnormal. Selling it for 5,200 is abnormal. So what we are going to do? Abnormal sales is 5,200 because it is sold at a loss. So what is the normal sales? 4 lakhs. This is the balance. Normal sales. Everything else is normal. 5,200 is abnormal. Clear? Now, abnormal sales, what did we do? The cost of this was half of the goods. No, cost of this was 10,000. So we sold it at a loss of 4,800. It is sold at a loss of 4,800. That means on normal sales, what is the profit we have earned? We know our profit, 69,200. So if you add the loss back, 69,200 plus 4,800. So 69,200 plus 4,800, 74,000 is the normal profit. Because we had this loss, that is why we came to 69,200. Are you getting my point? So now actual profit is 74,000. So we need the normal. So 74,000 divided by 4 lakhs. Gross profit percentage will be 74,000, which should have been the normal profit, divided by 4 lakhs into 100 gives you 18.5%. So your profit percentage on sales is 18.5%. This is what we had to do to reach this. Remove all abnormalities, make everything normal. Then in the sale also remove the abnormal sale, find what is the profit on normal sales. Then you calculate the gross profit percentage. Clear? Next, what we are going to do? We have to prepare memorandum. We have to prepare memorandum trading account. For what period? For the affected period, just before fire. 1/1/2023 to 31st of March 2023. 1/1/2023 to 31st of March 2023. Clear? Now, to opening stock. How will we get the opening stock? We already know the closing stock of the previous year. Closing stock of the previous year was 68,800. Normal, everything normal. 68,800 opening stock. Then purchases, 2 purchases. Do we know the purchases already? Purchases is given for the period 1,08,000. 1,08,000 is purchases. By sales. Do we know the sales? Yes, 100%, 122,800. 122,800. This is the sales. Then what we need? 2 gross profit by closing stock. 2 things we need: gross profit and closing stock. Okay, closing stock will obviously be the balancing figure. Gross profit we have to calculate. Gross profit we have to calculate. Now what has happened here? 1/4 of the original stock was sold for 2,800 in February. Okay, 1/4 of the original stock. 1/4 was what? 20,000 we had. Out of that, original stock is 5,000. Now understand this: 20,000 stock. In that, half is sold in 2022 only. Then half was remaining. It was remaining closing stock of 2022. We made the correction. Now what they told, 1/4 of the original stock. 1/4 means in this half again. So half of this is sold in 2023, and other half of this is closing there in the closing stock of 2023. This is the circus they are doing. Okay, so now what we are supposed to do, half of the original stock was sold for 2,800 and the remaining stock was taken valued at 60% of the original cost. Okay, 60% of original cost. So half means 5,000. 5,000 goods sold for 2,800. There is a loss, and here 5,000 goods are taken at 60%. So 60% of 5,000 is 3,000. They are taking 3,000 as the closing stock. Okay, the remaining stock was valued at 60% of the original stock. With the exception of this item, the rate of gross profit remained fixed. So what we are going to do now, we have to calculate profit, right? So our sale is, understand this, our sale is 122,800. In that, we are going to keep abnormal separate and normal separate. Abnormal separate and normal separate. Abnormal sale is how much? They only have told it is sold for 2,800. So abnormal sale is 2,800. Normal sale is therefore 1,20,000. On that 18.5%. 1,20,000 into 18.5%. 22,200. 22,200 is your normal sales. 22,200. Abnormal sale is how much? 2,800. On that, what was the cost? Cost of that was 5,000. So therefore, they made a loss of 2,200 loss. So when you check this net, what we have? 22,200 profit, 2,200 loss. So our net profit, gross profit after adjusting that is 20,000. Is it clear? So you can put over here gross profit 20,000 from the working note. Therefore, you will get the closing stock now 68,800 plus 1,08,000 plus 68,800 plus 1,08,000 plus 20,000 minus 122,800. So you have closing stock on the date of fire 74,000, which is your balancing figure. 74,000 is the closing stock on the date of fire. Are you following this? Okay. Now what happens? Understand this. Closing stock on date of fire is 74,000. But do you remember in that closing stock also what was 5,000 is taken at 3,000. It is reduced. So what we will have to do is add reduction in stock. Reduction in stock. Everything we are normalizing, no? When we claim, we are going to give the actual figures to the insurance company. So 5,000 stock which we took at 3,000, 2,000 is a loss. Added back. Now you're getting 76,000. Closing stock at cost on date of fire. Closing stock at cost on the date of fire. 76,000. So now what happens? 76,000 is the closing stock. We have salvage value. What is the salvage value? They have given in the question. The stock salvage was estimated at 24,000. 24,000. So 76,000 minus 24,000. Sorry. Reduction, no? Stock is reduced. So minus 2,000. So you have 72,000 remaining. Closing stock on the date of fire, 72,000. You have reduced it. So 72,000 minus 24,000. So you are having 48,000. This is your loss of stock. This is your loss of stock. 48,000 is your loss of stock. Clear? Now what happened? What is the policy amount? 3 lakhs. On the date of fire, how much stock you had? 74,000. So you have lesser only, so no average clause is applicable. Therefore, claim will be 48,000 or 3 lakhs, whichever is less. And which is less? 48,000. Which is less? 48,000. Is this clear? This should be the situation. This is the situation. You can have a look at it. Trading account we prepared, but there also a lot of abnormal items were there. We kept adding back the abnormal items. We got the gross profit percentage. Then using that gross profit percentage, we found the closing stock on the date of fire. That has to be undervalued. Remove the 2000 which is reduced. Then you will get the real value. What is there? Okay, which is lost. Then salvage value remove. You will get the closing loss of stock. No average clause is applicable because actual policy amount is much higher. Okay, this should be it with question number 2. Let's go to question number 3. Question number 3. Yes, next question. You can see fire occurred on 1st February 2023 in the premises of Legend Limited. Okay, a retail store and business was partially disorganized up to 30th June 2023. The company was insured under a loss of profit for 1,25,000 for 6 months period indemnity. Okay, this is not a loss of stock question. This is loss of profit question. Okay, from the following information, compute the amount of claim under the loss of profit policy. We are affected from what date to what date? 1st February to, so we always do that. What is the affected period? Affected period is 1st February 2023 to we were affected till 30th June. So 30th June 2023. That means we are affected for 5 months. 5 months we are affected. February, March, April, May, June. Okay, but the policy has indemnity period of 6 months. Okay, we have policy for 6 months, but we were affected only for 5 months. So our claims will be for 5 months. Calculations will be for 5 months. Okay. Actual turnover they have given from 1st February to 30th June. Turnover from 1st February to 30th June 2022 they have given. Turnover from 1st February 2022 to 31st January 2023 they have given. Net profit for last financial year, insured standing charges of last financial year, total standing charges of last financial year, turnover of last financial year is also given. Okay. The company incurred additional expenses amounting to 6,700, which reduced the loss in turnover. Additional expenses they have incurred 6,700. There was also savings during the indemnity period of 2,450 in the insured standing charges as a result of the fire. There has been consistent increase in trade since the date of last annual accounts. It has been agreed that an adjustment of 15% to be made in respect of upward trend in turnover. This is our question. Similar question we have already solved in regular class. Let's try to solve this as well. First, what do we need? We need gross profit percentage. Here the gross profit percentage is net profit of previous financial year plus insured standing charges. Insured standing charges divided by sales of previous financial year. This is the formula. Okay, net profit of previous financial year. Do we know the net profit of previous financial year? 70,000. So this will be 70,000 plus insured standing charges. That is also given 56,000 divided by sales of previous financial year. Previous financial year, can you see turnover of last financial year? 4,20,000 divided by 4,20,000 into 100. So 70,000 plus 56,000 divided by 4,20,000. So the profit percentage is 30%. Gross profit percentage is 30%. Next, what we are supposed to do? We need to find the standard sales. Okay, standard sales. What is standard sales? Last year, same time, what was the sales? Now, understand this. Okay, next thing that we are going to always compute is standard sales. Standard sales, they have given here turnover from 1st February to 30th June 2022. Last year, same time. So, 1st February 2022 to 30th June 2022. Standard sales. What is the standard sales? The standard sales is 2 lakhs. Standard sales was 2 lakhs. Can you see it's given over here 2 lakhs? But what did they tell you? There has been a considerable increase in trade this year and it has been agreed that adjustment of 15% is to be made for upward trend in turnover. So you have to add 15%. So 2 lakh plus 15% will give you 2,30,000. This is your standard sale. Standard sales. Next, what we are supposed to find out? Short sales. Next, we are supposed to find is short sales. What is short sales? Standard sales minus actual sales. Standard sales is 2,30,000 minus actual sales. Actual turnover for the affected period is only 80,000. So minus 80,000. This becomes 2,30,000 minus 80,000. 1,50,000 is your shortage of sales. This much less sales we made because of the fire that had occurred. Now, okay, loss of profit. Loss of profit. 1,50,000 into 30%. That gives you loss of profit of 45,000. 45,000 rupees profit I lost because of the incident of fire. 45,000 rupees I have lost. Next, what? Next. After that, what are we supposed to do? Okay, next we are supposed to calculate the additional expenses claim. Additional expenses claim. We know always additional expenses claim will be, okay, least of the three. First is actual additional expenses. Actual additional expenses, can you see company incurred additional expense of 6,700. So the actual is 6,700. Then what we are going to do? What is the extra profit we made because of extra additional expenses? Can you see they have said which reduced the loss in turnover? So our sale was how much? 80,000. 80,000 into 30%. 80,000 into 30%. 24,000 is the extra profit that we have made. We have covered this in regular class. Least of the three you have to see. Then what we are doing? Then there is a formula. Then there is a formula. What is the formula? Actual additional expenses 6,700 into gross profit on annual turnover, okay, divided by gross profit on annual turnover plus uninsured standing charges. Okay, so gross profit on annual turnover we need to calculate. What is the annual turnover? Annual turnover. Annual turnover means the last 12 months sales, just before the fire, last 12 months sales. Can you see turnover from 1st February to 2022, 31st January 2023? Can you see the annual turnover there? 4,50,000. Plus, we have to add 15% for trend. That they have told. Everything has to be adjusted. 15% for trend. So 4,50,000 into 15% will be 67,500. Now what you're going to do? 4,50,000 plus 67,500, 5,17,500 is your annual turnover into gross profit percentage 30% into 30%, 1,55,250. This is gross profit on annual turnover. So 6,700 into 1,55,250 divided by, the formula says gross profit on annual turnover divided by gross profit on annual turnover plus uninsured standing charges. Plus uninsured standing charges. What are the uninsured standing charges? 64 minus 56. 8,000 is uninsured standing charges. So plus 8,000. So what you will do? 155,250 divided by 163,250 into 6,700. You get 6,372. This is your additional expenses. Out of the three, if you see, this is the least of the following. So that will be taken 6,372. Is this clear? Additional expenses claim. So now what we will do? Computation of loss of profit. Computation of loss of profit. What was the loss of profit actually? 45,000. Loss of profit 45,000 plus loss of profit is 45,000 plus additional expenses. additional expenses claim. We have calculated that 6372 minus savings. Do we have any savings? Savings is given, total savings is 2450. So 45,000 plus 6372, 45,000 plus 6372 minus 2450, 48,922. Total loss of profit. Total loss of profit is 48,922. What is the policy amount? The policy amount that they had taken was 1,25,000. Gross profit on annual turnover was 1,55,000. So average clause is applicable. So average clause, okay, claim subject to average clause. When average clause is applicable, you have to remember in loss of stock, if the closing stock on the date of fire is more than policy amount, average clause is applicable. In loss of profit, the profit on annual turnover, if it is more than the policy amount, here it is 125, policy amount, the annual turnover gross profit is 155,250. That time average clause is applicable. You can see the regular videos, we have covered this. Okay, so now what we will do, 48,922 into policy amount 1,25,000 divided by gross profit on annual turnover 155,250. So the claim will be 1,25,000 divided by 155,250 into 48,922. That gives you 39,390. 39,390 will be your final claim amount. Can you see amount of claim under policy? 39,390. Yes, this should be your claim. You can see this from starting. Affected period you have to find out. You have to find out the gross profit percentage, which came to 30. Standard sales is last year same time. Give the trend effect. Then short sales you get. Standard sales minus actual sales. Loss of profit you got 45,000. Additional expenses. List of the following: actual amount, the additional sales into gross profit percentage, or then the additional expenses into gross profit on annual turnover divided by gross profit on annual turnover plus uninsured standing charges. Apply that formula. Least of the three was this one. Take that. Okay, annual turnover, how will you calculate? Last 12 months before the date of fire. Add the trend, you'll get the annual turnover. On that, calculate gross profit. This amount is much more than the policy amount. Therefore, even average clause is applicable, and this is your final claim calculation. Clear? This is your solution for question number 3. We don't have any unsolved case in this particular chapter. So what we are going to do, we are going to go to the examination question. Both the exams, they have asked one question from fire insurance claim. Okay. Now, you can see first we will go into December 2023. Can you see here question number 6B? 6B, they have put fire insurance claim, 7-mark question. Work out the amount of claim for claim of loss by fire. Okay. So what we are going to do, we are going to solve that. Yes, give me a second. Yeah. December 2023, question number 6B was asked for 7 marks. 7 marks. We have to try and solve this question. Okay, on 1st April 2023, the stock of Mr. Hari Prasad was destroyed by fire, but sufficient records were saved from which following particulars were ascertained. Stock was destroyed, that means they are talking about loss of stock. Okay. Stock on 1st January 2022, last year, previous year. Stock on 31st December 2022, last year, ending. Okay, purchase last year, sales last year, and the purchase and sales of this year till the date of fire is also given. In valuing the stock for the balance sheet on 31st December 2022, last year when they are valuing, 4,600 had been written off on certain stock, which was a poor selling line, having a cost of 13,800. They have reduced it. Okay, we will add it back. To normalize things, remember, a portion of these goods were sold in March 2023 at a loss of 500 on original cost of 6,900. Okay. In sales also we have abnormal sales. Okay. Remainder of the stock was now estimated to be worth its original cost. It's taken at cost only. So here no reducing. Subject to the above exception, gross profit has remained at a uniform rate throughout the year. Value of stock salvaged and the policy amount is also given subject to average clause. Work out the claim for loss of fire. First, what we are supposed to do? We need the gross profit percentage. So we have to prepare the trading account of previous year. First thing we are going to do is trading account for which year we are going to do? Last year, 2022. For year ending 31st December 2022. Here, trading account for the year ending 31st December 2022. Now what we are going to do? We are going to write stock, opening stock 147,000. To opening stock 1,47,000. There is no problem in this one. Then stock, closing stock 159,200. By closing stock 159,200. But what we are going to do? 159,200 was reduced. Can you see? In valuing 4,600 has been written off on certain stock. So add that 4,600. It was written off. So 159,200 plus 4,600. You will get 163,800. This is the closing stock. Add back whatever is removed because we want to know what is the normal gross profit percentage. Then this is done. Purchases for the year ended 7,96,000. So you can write 2 purchases 7,96,000. Then you can see sales for the year ended. You can write by sales 9,74,000. 9,74,000. This much we found. Automatically we'll get last year's gross profit balancing figure. Okay, so what we are going to do? 9,74,000 plus 163,800 minus 1,47,000 minus 7,96,000. 1,94,800 is your gross profit. Okay. Now what you are going to do? Gross profit percentage I need 194,800 divided by 9,74,000 into 100. 194,800 divided by 9,74,000 into 100. That gives you 20%. Gross profit percentage is 20%. Okay, that is a normal because we removed all the abnormal and we calculated only the normal gross profit percentage. Now what we are going to do next? Next thing that we are supposed to do is prepare memorandum trading account. Okay, memorandum trading account. For what period we are going to prepare? 1st January 2023 to 31st of January 2023 because on 1st April the stock was destroyed by fire. So 1/1/2023 to 31st of March 2023 we are going to calculate. Clear? First, 2. Opening stock. Opening stock is last year's closing stock. Abnormal item we are going to remove 163,800. 163,800 opening stock. Do we know the purchases during this period? Yes, 3,24,000 given. 2 purchases 3,24,000. Do we know the sales during the period? Yes, 462,400. By sales 4,62,400. Then what do we have? We need to find the closing stock by closing stock balancing figure and we need to find the gross profit. If you get this, that time you will get the closing stock on the date of fire. Now what we have to do? Directly we can't apply the 20% because in sales there is abnormal sales. So sales what we have to do? 4,62,400. This sale has to be divided into 2 parts. The 2 parts are normal sales and then we have abnormal sales. Normal sales and abnormal sales. Abnormal sales is given. Can you see they have told 4,600 written off. A portion of these goods were sold at a loss of 500 on original cost of 6,900. Original cost is 6,900. It is sold at a loss. So the abnormal sale is 6,900 minus 500. It is sold at a loss of 500, they said. Original cost of 6,900. So 6,900 minus 500. The abnormal sale is 6,400. Abnormal sale. Therefore, what is the normal sale? 4,62,400 minus abnormal sale of 6,400. So 462,400 minus 6,400, you get 4,56,000. This is your normal sales. On normal sales, you made 20% profit into 20%, 91,200. 91,200. On this, you made a loss of 500. Correct? On this sale, you made a loss of 500. So if you take the net now, 91,200 minus 500, 90,700 is our profit. Clear? What you have to do? Calculate the profit. So to calculate the profit, you have to separate the sale into normal and abnormal. On normal, apply the percentage, you will get the profit. On abnormal, see what is the profit or loss that is made. They have sold it at a loss of 500, they said. How do we know it? Half of the part of these goods were sold at a loss of 500 on original cost of 6,900. So 500 is the loss. So 90,700 is your gross profit. You can put 90,700. Now whatever is the balancing figure, it's your closing stock. 163,800 plus 3,24,000 plus 90,700 minus 462,400. You will get 1,16,100. Yes, 1,16,100. So therefore, closing stock on date of fire is 1,16,100. Closing stock on the date of fire is 1,16,100. Can you go to the end of the question? Value of stock salvaged. Salvaged is 11,600 minus stock salvaged 11,600. So 11,600 minus 11,600, 1,04,500. 1,04,500 is loss of stock. Loss of stock 1,04,500. Now what we have to do? You have to calculate the claim. But the claim will be subject to average clause. Why it will be subject to average clause? Remember I told you, if it is loss of stock, if closing stock on the date of fire is more than policy amount, average clause applicable. Closing stock on the date of fire is 116,100. Here it is only 1 lakh policy. If it is loss of profit, then what you have to remember? Gross profit on annual turnover. If it is more than the policy amount, then average clause is applicable. Here, closing stock is 1,16,100. Policy was only 1 lakh. So our claim will be like this. Loss of stock 1,04,500 into policy amount 1 lakh divided by closing stock on the date of fire 1,16,100. This will be your claim. So 1 lakh divided by 1,16,100 into 1,04,500. So 90,008.6. So 90,009. So what you can do, 1 lakh divided by closing stock on the date of fire was 116,100 into loss of 1,04,500, 9 lakh 9. Yes, 9 lakh 9 will be your answer. Is this clear? Are you following this? Yes, this should be your answer. Can you see 7-mark question? Easy 7-mark question asked in the exam. Trading account done. Okay, this is how you calculate. So always you have to have the gross profit percentage. So last year's your trading account, if you prepare, you'll get the gross profit percentage. Then you can prepare memorandum trading account. Okay, that was December. Now what happens? Let's see what is the situation with June. Okay, December is done. Let's start with June. Yeah, in June 2024 paper also there is one insurance claim question. Can you see 7 marks? Again, it was in 6B. Along with branch accounts, they have put insurance. Okay, this is the question 6B. From the following information, ascertain the consequential loss claim. This is not loss of stock, it is loss of profit. Loss of profit question is asked, okay, in June 2024. Okay, what we can do, June 2024, yes. Now, June 2024, okay, and what is the question number? 6B. They have asked it for 7 marks. Question number 6B, they have asked for 7 marks. Next. Okay. Understand. Financial year ends on 31st March with sale of 25 lakhs. Okay, we know the sale of financial year. Date of fire is 1st September. That means the affected period of interruption is 1st September to 1st February next year. Okay, 1st September there was a fire. So 1st September to 1st February of next year there is affected period. So September, October, November, December, January, February. 6 months. 6 months it is affected. 1st September to 1st February. Indemnity period is also 6 months. So fine, we are within the policy. Okay, net profit 2,75,000 plus insured standing charges 3 lakhs. Uninsured standing charges is 50,000. Okay, sum insured is also given 6,16,000. Standard turnover for corresponding month 1st September to 1st February in the year preceding the date of fire is 7,50,000. They have given the standard turnover last year same time. Turnover in the period of interruption is 2,25,000. Actual turnover is 2,25,000. Annual turnover, that is 12 months preceding the date of fire, is also given. Annual turnover is also given. Okay, increased additional expenses amounting to 50,000 with the saving of insured standing charges of 14,000. Increased additional expense is also there. Reduced turnover avoided through additional expense is 1,50,000. How much turnover we avoided? That means we made extra sale of 1,50,000 because of the additional expense. Remember this. Special circumstances clause stipulated. Increase in turnover, standard and annual 10%. You have to increase it. Okay. Increase in rate of gross profit 2%. Okay. We know the situation. First thing, we are always going to calculate gross profit percentage. Gross profit percentage will always be net profit of last financial year plus insured standing charges divided by sales of last financial year. Okay, gross profit percentage. What is the net profit of last financial year? Can you see net profit is 2,75,000. So 2,75,000 plus insured standing charges 3 lakhs. Net profit 2,75,000 plus insured standing charges is 3 lakhs. Yes, so 2,75,000 plus insured standing charges of 3 lakhs. The whole thing divided by sales of last year. Sales of last year, can you see financial year ends on 31st March with sales of 25 lakhs. Last year's sale is 25 lakhs. So the gross profit percentage will be 2,75,000 plus 3 lakhs divided by 25 lakhs into 100. The gross profit percentage is 23%. But what did they tell? Increase the rate of gross profit 2%. So add 2%. Now you will get gross profit percentage of 25%. Gross profit percentage is 25%. Is this clear? Yes. Now what we are going to do? Take the standard sales. Standard sales is nothing but last year same time. Standard sales they have given here. Standard turnover for the corresponding period is 7,50,000. So standard sales will be 7,50,000. But we have to add a percentage for trend. Can you see increase in turnover 10%? So add 10%. That makes it 7,50,000 plus 10%, 8,25,000. Standard sales is 8,25,000. What is the actual sales? Actual sales during the affected period. Have they given the actual sales? Can you see? Annual turnover in the period of interruption is 2,25,000. Actual sales is 2,25,000. Therefore, we can get the short sales. What is the short sales? 8,25,000 minus 2,25,000 is equal to 6 lakhs. Short sales is 6 lakhs. Next thing you're supposed to calculate is loss of profit. Loss of profit. How much sales did I lose? 6 lakhs. I lost 6 lakhs of sales. What was the gross profit percentage? 25%. So 6 lakhs into 25% is 1,50,000 my loss of profit. Loss of profit. To this what we have to calculate? Additional expenses claim. Additional expenses claim. Okay. What is the actual additional expenses? They only have told, okay, increased additional expenses amounting to 50,000. So actual additional expenses 50,000. That is option number 1. Whichever is less we are supposed to take. Second option is gross profit on additional sales due to additional expenses. Because of the additional expenses, what extra sale you made on that gross profit. Can you see they have told reduced turnover avoided through additional expenses 1,50,000. That means extra sale that you made is 1,50,000 into the gross profit percentage is 25%. So 1,50,000 into 25% is 37,500. Second option. Third option. What is the third option? Third option is additional expenses into gross profit on annual turnover divided by gross profit on annual turnover plus uninsured standing charges. Uninsured standing charges. This is the formula. Clear? For that, what we need to do? Go and as a working note, calculate what is the annual turnover. What is the annual turnover? Annual turnover means last 12 months sales. Have they given that already in the question? Annual turnover, that is 12 months preceding the date of hire, 28 lakhs. Can you see they have given 28 lakhs? But this has to be increased for the trend. Remember the trend 10%. Add 10% to this. So 28 lakhs plus 10% makes it 30,80,000. 30,80,000 annual turnover. Clear? When you have 30,80,000, that is annual turnover. Now what you're going to do, calculate gross profit on that. Gross profit on annual turnover, 25% is the gross profit percentage. 30,80,000 into 25%, 7,70,000. 7,70,000 is gross profit on annual turnover. 30,80,000 into 25%. 7,70,000. So what we will do, we'll apply that here. Additional expenses 50,000 into gross profit is 7,70,000. Can you see 7,70,000? Yes. Divided by gross profit on annual turnover 7,70,000 plus uninsured standing charges. Uninsured standing charges are given in the question, which is 50,000. Uninsured standing charges 50,000. Add 50,000. That gives you the formula. So 7,70,000 divided by 8,20,000 into 50,000, which is extra expenses. So your additional expenses 46,951. 46,951. If you see the three of them, least of the three is what? 37,500. Least of the three is 37,500. Therefore, you're going to take 37,500. Now you can calculate computation of total loss of profit. Computation of total loss of profit. Okay, this should give you the solutions. What is your loss of profit? What is your loss of profit? What is your loss of profit? Can you see when we go back into the question, loss of profit we have calculated and kept over here 1,50,000. So my loss of profit is 1,50,000. 50,000 plus additional expenses claim. What is the additional expenses? Which is the least among the three? 37,500. So you will take 37,500 minus savings. Do we have any savings? Yes, they have given in the question. Additional expenses 50,000. Savings is 14,000. Savings was 14,000. So minus 14,000. Can you see? Savings of insured standing charges is 14,000. So 1,50,000 plus 37,500 minus 14,000, 1,73,500. 1,73,500 is your total loss of profit. Total loss of profit. Remember, I just told in the previous question, in loss of stock, if the closing stock on the date of fire is more than policy amount, average clause is applicable. In loss of profit, if the gross profit on annual turnover is more than the policy amount, then average clause is applicable. What is the gross profit on annual turnover? 770. What is the policy amount that they have given? Sum insured 616. That means, can you see, our gross profit on annual turnover is more than the policy amount? Average clause is automatically applicable. So claim subject to average clause will be given by the formula loss of profit, total loss of profit into policy amount divided by gross profit on annual turnover. Total loss of profit is 173,500 into what is the policy amount? Policy amount is 6,16,000, sum insured 6,16,000 divided by gross profit on annual turnover. Gross profit on annual turnover is 7,70,000. 7,70,000 is equal to 6,16,000 divided by 7,70,000 into 173,500. You get 1,38,800. This is your final claim. So you can just use the formula 173,500 into 6,16,000 divided by 7,70,000. 138,800 is your claim. Because of average clause, the claim is reduced. So this is your solution. Okay, always follow this procedure. First, you calculate gross profit percentage. If there is any increase in trend, do that. Standard sales is last year's sales. Add the trend, you will get the standard sales. Actual sales is sales during the affected period. Short sales is the difference between the two. On the short sales, apply the gross profit percentage. You will get the loss of profit. Additional expenses claim, we have three options. Whichever is less, you are supposed to take. Actual or gross profit on additional sales due to additional expenses. In the question, they told we have made extra sales because of additional expenses, 1,50,000 into 25%, you will get the answer. Then what you are supposed to do? Additional expense. You have to apply this formula. Additional expenses into gross profit on annual turnover divided by gross profit on annual turnover plus uninsured standing charges. Annual turnover is given 28 lakhs. Add the trend, it will become the correct annual turnover. In that, out of the 25%, you see 7,70,000. 7,70,000 is gross profit on annual turnover divided by 7,70,000 plus 15,000 plus 15,000. 50,000 uninsured standing charges. You get the amount, but this amount is higher than the other. So this is the least among the three. So you're going to take 37,500. How will you calculate the loss of profit? Loss of profit plus additional expenses claim minus savings. This is your total loss of profit. Always you have to see gross profit on annual turnover. If it is more than the policy amount, that means average clause is applicable. Here gross profit on annual turnover is 770, but the policy amount is only 616. So use the formula, apply the average clause and find out the claim. Clear? This should be your solution for that particular question. So June 2024 and December 2023, both the attempts they have asked question, one loss of stock, one loss of profit. Yes, that's it with this chapter. Let's go into the next chapter. All the best for your CMA exams. Hello students, welcome to the next video. Now we'll go into the hire purchase chapter and do the same thing, solve all the comprehensive questions, and then we'll go into the past examination questions. Okay. First question from hire purchase. On 1/1/2021, Dola Limited purchased a taxi from Cyan Limited on hire purchase system. A down payment of 15,000 and 3 equal installments together with interest at 5% per annum on the outstanding balance of the capital sum are to be made. The amount of last installment payment was 15,750. Depreciation has to be provided at 10% under reducing balance method. At the end of third year, taxi was sold for 25,000 in cash. Okay. Prepare taxi account and vendor account in the books of Dola Limited. Now, what we have to understand? First thing, we have to prepare the repayment schedule. Always we have to prepare the repayment schedule. Only then we will get to know how much is paid each year. So we need the repayment schedule. Clear? Now, when did they purchase? Repayment schedule looks like this. Opening balance. Okay, opening balance. We can have the year. Opening balance. Installment. Interest. Principal portion. Closing balance. This should be the situation. Now here, purchased on 1/1/2021. 1/1/2021. So 31st of December 2021 is the first year. 31st of December 2022 is the second year. 31st of December 2023 is the third year. Okay, 3 years. Now, what did they purchase it for? Down payment is 15,000. You only know that down payment is 15,000. What they have given is last installment. Amount of last installment was 15,750. So the last installment is there, 15,750. Other than that, we don't know anything. So we take this as the root. Reverse calculation we do and we will reach the answer. So closing balance will be 0 after third year. Closing balance is 0. Interest they have told 5%. 5% is the interest rate. So 15,750 is 105. How much is 5? Use the calculation. 15,750 into 5 divided by 105. 750 is interest. Therefore, 15,000 is principal. That time what happens? This becomes the opening balance. So opening balance is 15,000. Now what happens? This becomes the closing balance. Closing balance of previous year 15,000. Now what do we know? We don't know the installment. So closing balance is 15,000. What did they tell? 3 equal installments together with interest at 5% per annum. So now we know every year principal of 15,000 is paid. 15,000 principal is paid. 15,000, 15,000, 15,000 together with interest. So if this was 15 and closing balance is 15, here the opening balance will be 30. If the opening balance is 30, 30 into 5%, you would have paid 1,500 is the interest. 1,500 interest. So now if 1,500 is interest, the total installment would have been 16,500, including the interest and principal. Now what happens? Now closing balance is 30,000. If closing balance is 30,000, now what happens? 15,000 opening balance would have been 45,000. Opening balance is 45,000. 30 plus the 15 which is not paid. Okay, so now what happens? 45,000 into 5% will be 2250. 45,000 into 5%, 2250 will be the interest. 2250. Now 2250 plus 15,000. So total installment amount is 17,250. Now you have this. So now you know what is the opening balance. Opening balance is 45,000. So therefore 45,000 plus the down payment of 15,000 gives you 60,000. 60,000 is the cash price. 60,000 is the cash price. The price at which it was purchased is 60,000. Now going further, what did they ask you to prepare? Going further, what did they ask you to prepare? Now you can see interest 2250, 1,500, 750. Yes. Now they asked us to prepare taxi account and vendor account. So now we have to write in the books of Doha Limited, Dola Limited. Okay, and we are going to prepare taxi account. We need the ledger for taxi account, and then we need for hire vendor. Who is the hire vendor? Vendor, we don't know the name. Okay, it is given purchase taxi from Cyan Limited on hire purchase limited. Okay, Cyan Limited. So hire vendor for us is Cyan Limited. This is the ledger, guys. Now let's start. Okay, Dola Limited is the person who is purchasing. When they purchase the taxi, what happens? Taxi comes in, they get taxi account debited 1/1/2021. 1/1/2021. Taxi account debited to. Okay, taxi account is debited to what? The hire vendor. Hire vendor, we know it is Cyan Limited. To Cyan Limited, and it is purchased for 60,000. Go to Cyan Limited 1/1/2021 by taxi account 60,000. First year, what you will do, as soon as you get the taxi, what will you do? You will pay the down payment. You will pay the down payment. So 1/1/2021, Cyan Limited account debited to bank account. Cyan Limited account debited to bank account 15,000. So you paid the down payment. What next now? What next after you paid the down payment? What next? Next thing is at the end of the year, interest will be due. Okay, at the end of the year, interest will be due. So interest account is an expense for us. Interest account debited 31st of December 2021. Interest account debited to Cyan Limited. So by interest, first year's interest we have already calculated 2250. 2250. Then what we are going to do, 31st of December 2021, Cyan Limited account debited to bank account. Cyan Limited account debited to bank account, and the installment is 17,250. You're going to pay an installment of 17,250. So now what happens? 31st of December 2021 to balance carried down. If you check 60,000 plus 2250 minus 15,000 minus 17,250, that means 30,000 is your balance carried down. 30,000. 1/1/2022 by balance brought down 30,000. By balance brought down 30,000. Is this clear? Now, what next? Taxi, what will happen? It will depreciate every year. So, 31st of December 2021 by depreciation account. And they have told in the question depreciation is 10% diminishing balance method. So, 6,000. So, you have 31st of December 2021 by balance carried down 54,000. By balance carried down 54,000. 1/1/2022, you're going to write to balance brought down 54,000. Now when we go to next year what happens? Again, same thing, interest due 31st of December 2022 by interest account. Interest is 1,500. Then what will you do? 31st of December 2022, you will pay the installment to bank account 16,250. 16,500. Then 31st of December 2022 to balance carried down, you have 15,000. And 1/1/2023 by balance brought down, you have 15,000 last year. Go into the taxi account next year. What will you do? 31st of December 2022, you will charge depreciation. By depreciation 5,400. 31st of December 2022. By balance carried down. 54,000 into 10%. Sorry, 54,000 minus 5,400. 48,600. 1/1/2023. To balance brought down. 48,600. To balance brought down, it is 48,600. Now, next, going into the third year. Third year, 31st of December 2023. Interest. By interest account. Interest is 750. Then 31st of December 2023. To what? To bank account. You're going to make the payment 16,750. Hire purchase system. You have paid all the installments. Van is yours. You have paid all the installment. Van is yours. Now 31st of December 2023. What will happen? By depreciation 4860. You can see the depreciations 4860. At the end of the third year, taxi was sold for 25,000. When you sell the taxi, what will you get? You will get money. Bank account debited to taxi account 31st of December 2023. You can write by bank account 25,000. By bank account 25,000. Now 31st of December 2023. 31st of December 2023. You have this situation. Okay. Can you see? Sorry. 48,600. 48,600 minus 4860 minus 25,000. That means you have a loss of 18,740. 18,740. 31st of December 2023. You're going to write by P&L. That is the end of the story. This is your taxi account. This is your Cyan Limited's account, and end of question number 1. Okay, let's go into question number 2. Question number 2. Let's go into the next question. On 1st April 2021, Guru and Co purchased a machinery on hire purchase system from Machinery Mart for a cash price of 7,50,000 to be paid as 118,050 cash down, that is down payment, and balanced by 3 equal annual installments of 3 lakh each. Of 3 lakh each. Interest is charged at 20% per annum. Interest is charged at 20% per annum. Gauru and Company has decided to write off depreciation at 15% per annum on diminishing balance method. And Gauru and Company has paid installment due at the end of first year but could not pay the next installments. First year installment they have paid, second year they have not paid. On 31st March 2023, the Machinery Mart took possession of the machine. On 15th April, Machinery Mart spent 30,000 on repairs and machinery and sold it for 1,80,000 on 20th April 2023. Installment due on 31st March 2023 was paid by Gauru and Company on 10th April. You are required to prepare. Okay, you are required to prepare Gauru and Company's account and return stock account in the books of Machinery Mart. Then machinery account and Machinery Mart's account in the books of Gauru. What we will do? First we will do in the books of hire purchaser. Then we will do in the books of hire seller. For anything, we need the table. Correct? For anything, we need the table. Prepayment schedule. Okay. We need the repayment schedule always to start solving. Otherwise, it's not possible. Okay. Now, let's go further. Yes. So now, when did they purchase the machinery? 1/1/2021. Okay, 1/1/2021 means 31st of March 2022 was the first year. Then 31st of March 2023 is the second year. 31st of March 2022, 31st of March 2023. Cash price was 7,50,000 and it is to be paid 1,80,000 as cash down. So opening balance will be 7,50,000 minus 1,18,050. 1,18,050. So 7,50,000 minus 1,18,050. So 6,31,950 opening balance. And balance by 3 equal annual installments of 3 lakh each. 3 lakh each, interest is to charge at 20% per annum. Okay, 3 lakh each they are going to pay, equal installment balance. So now 3 lakh installment is going to be 3 lakh, 3 lakh, and 31st of March 2024 it is going to be 3 lakh. Now just for your understanding, I'm showing you interest is basically 631,950. Interest rate they have told 20% per annum into 20%, 126,390 interest. So out of 3 lakh installment, if you're paying 120, if out of 3 lakh installment, if you're paying 126,390, that means principal is 173,610. So 631,950 minus 173,610 gives you 4,58,340. Opening balance 4,58,340. Now 4,58,340 installment. Correct? 3 lakh into interest. Interest is how much? 458,340 into 20%. Now you have 91,668 interest. Out of 3 lakh, if 91,668 is interest, 208,332. 208,332. So now 458,340 minus 208,332 will be 2,50,008. Opening balance will be 2,50,008. Now what you will do? Always in the last year, this only is the payment, 2,50,008 principal portion gone. So 3 lakh minus 250,008 will give you 49,992. 250,008 will be into 20% will be 50,000. So rough, you know this, we have already discussed in regular class. So this will be 0. This is your situation now. But last year is not even required, boss, because he is not paid second year only. Can you see? 31st of March 2023, he has paid only one. Decided to pay the installment due at the first year, but could not pay after that. Then the machinery is taken back. So now, next going further, what we are going to do is, in the books of, okay, Gauru and Company. In the books of Gauru and Company. Okay, that is the first thing. Now, and in the books of Gauru and Company, you are going to prepare machinery account and machinery mart account. You are going to prepare machinery account okay, then you're going to prepare machinery mart account. Machinery mart is nothing but the hire vendor. Machinery mart account, who is the hire vendor. Clear? Now, when did you purchase the machinery? You purchased the machinery on 1st April 2021. You're always going to pass the entry 1st April 2021. Machinery account debited to machinery mart account, and you have purchased the machinery for 7,50,000. And 1st April 2021, you're going to write buy machinery 7,50,000. 7,50,000. Is it clear? Yes. Can we go further? Of course. Next, paid 118,050 as cash down payment. Now what will happen? 1/4/2021, machinery mart account debited to bank account 118,050. 118,050 and balance in 3 equal installments that we have already seen. Now what happens? First year end, that is 31st of March 2022, by interest account. By interest account, we already have it in the table. First year's interest is 126,390. 126,390. Then 31st of March 2022, you're going to make the payment to bank account. How much is it? 3 lakhs. to bank account 3 lakhs. Then what is going to happen? 31st of March 2022 to balance carried down 7,50,000 plus 126,390 minus 118,050 minus 3 lakh 458,340 458,340. Now you can check 458,340 is there in the table. 458,340 first year closing balance. So then we will write 1/4/2022 by balance brought down 458,340. Balance brought down 458,340. Now next, after that, depreciation. Depreciation, what rate they said? Depreciation is 15% per annum is the depreciation. Clear? So you are going to write 31st of March 2022 by depreciation 7,50,000 into 15%, 1,12,500. Then 31st of March 2022 by balance carried down. So 7,50,000 minus 1,12,500, 637,500. And then you will write 1/4/2022 to balance carried down. Sorry, balance brought down 637,500. 1 year completed. 1 year you have paid the installment also. No problem at all. Nobody has trouble. Okay, we go to the next year. Next year what happens? Next year, 31st of March 2023. 31st of March 2023. Interest. How much is the interest for the second year? 91,668. So you're going to write by interest account 91,668. Then 31st of March 2023. Are you making payment? Never. Next year payment you are not making. So can you see end of the first year but could not pay the next installment on 31st March 2023. Machinery Mart took the possession of the machinery. Machinery Mart took the possession of the machinery. 15th April Machinery Mart spent, but what happened? You have made the payment on 10th April. So now what happens? Understand this. So Machinery Mart took the machine. What is the machine value in your books? Calculate depreciation for one more year. 31st of March 2023. Here you are going to write by depreciation account 6,37,500 into 15%, 95,625. 95,625. Clear? This is the depreciation. So 637,500 minus 95,625. You have 541,875. The balance in the machinery. Machinery is gone. Machinery is gone. Okay. Now what did they tell here? Can you see? Installment due on 31st March was paid by Gauru on 10th April. Installment due was paid on 10th April. Can you see the installments? You can see here. First cash price 126,390. Did we get that? Yes, 126,390. And can you see the next one? Next one is not there only. Okay. 208,332. I think that was the number which we were also checking. 208,332. Yes. And the third installment is 250,008. Yes, we have these numbers. We have these numbers 49,992, all that thing. Okay. But did they pay? No. They've just given the calculation of interest in each installment as the hint. Okay. Now what happens? See over here, they have told the second installment on 31st of March was paid by Gauru on 10th April. He paid it. On 10th April, he has paid it. So now what happens here? You can write on 31st of March 2023, to balance carried down. Okay. He has not paid anything in that year. So 458,340 plus 91,668. So this becomes 550,008. 550,008. And you can write on 1st April 2023 by balance brought down 550,008. Now what happens? 550,008. Here we take this balance down. 31st of March 2023. Let's take this balance down. Truck is gone, but let's do the adjustment on 10th April because that is the date we are making some payment. by balance. Okay, you can see by balance carried down 6,37,500 minus 95,625, 541,875 is my balance. 541,875, 1/4/2023 will write to balance brought down 541,875. Clear? Machinery goes to next year. Now, what happens over here? Are we paying some money? Yes, we are paying some money. On 10th April 2023, you're paying the installment. So it will be to bank account 3 lakhs. To bank account 3 lakhs. You're making payment. Now what happens? You're not paying anything else. Your machinery is gone. So 10/4/2023, 550,008 minus 3 lakhs, 250,008. 250,008 to machinery account. To machinery account. It is returned, right? So 10th April 2023 by machinery mart account 250,008. Where you had to pay 250,008. Your machine of 541 is gone. So 541,875. 10th April 2023. You're going to write by P&L account 291,867. 291,867. This is the situation. This is the machinery account. This is the machinery mart account. Is this clear? Are you clear with this? Yes. There shouldn't be any other problem. Okay, in the books of Gaurav. And now what they have asked in the books of machinery mart. Now you're going to write in the books of machinery mart. Yes, in the books of machinery mart, what are the ledgers they have asked you to prepare? They have asked Gaurav and Company's account and returned stock account. Okay, we'll prepare Gaurav and Company's account. Gaurav and Company account. So there, whatever you did, no, you're just going to do the opposite over here. So see over here, Gaurav and Company's account, in books you have written here. Okay, first machinery is gone. Machinery is gone. So here we are going to write Gaurav and Company has to pay us money. So 1st April 2022. Sorry, 1st April 2021. You're going to write Gaurav and Company's account debited to hire purchase sales 7,50,000. 7,50,000. And immediately what we are getting down payment. So 1/4/2021 by bank account. You're getting down payment of 118,050. 118,050. You're getting down payment. Then immediately what happens after that? End of the year, interest is due. Here interest is receivable for this person. 31st of March 2022 to interest account. Interest is an income for this person. So interest you can see 126,390. First year it is 126,390. 390. Then 31st of March 2022. We are getting money by bank account 3 lakhs. You're getting money of 3 lakhs. Then what happens? 31st of March 2022 by balance carried down. So 7,50,000 plus 126,390 minus 118,050 minus 3 lakhs 458,340. If you notice, it was 458,340 even in the books of the other person. There he was telling I have to pay. Here you are telling you have to get. Okay. So 1/4/2022 to balance brought down 458,340. 458,340. Then what happens? Then 31st of March. Okay. 458,340. Then you're going to write 31st of March 2023. Interest to interest account. Interest is due. Can you see the interest amount that we have already calculated and kept? Second year's interest is 91,668. 91,668. Now, next what happens? 31st of March 2023. You can just carry it down. 458,340 plus 91,668, 550,008. That was the balance there also. By balance carried down. Next, 1/4/2023. You're going to write to balance brought down. 550,008. Then when the balance is brought down, what happens that time? You're getting money. You're getting money. On 10th April is giving you something at least. 10th April 2023 by bank 3 lakh. Now the repossessed stock. Okay, repossessed stock. They are calling it something else, but it's called as repossessed stock. They are called it as returned stock account. Okay, same thing. Returned stock account. Return stock account, what happens? You get money 10/4/2023. Return stock account debited to Gauru and Company. Gauru and Company account. Return stock account debited to Gauru and Company. 550,008 minus 3 lakhs. You will get 250,008. 250,008. 10th April 2023. By what? 10th April 2023. By what? Now here you are going to write by returned stock, and here you are going to put the 250,008. See what happened? You got a stock back and 250,008 was the value because that was the amount pending. Can you see they have told 30,000 they have spent on repairs. So on 10th April 2023, you're going to write to bank account. You have spent 30,000. In bracket, you can write repairs. In bracket, you can write repairs 30,000 you have spent. And then 31st of, sorry, not 31st, that day only, 10th April 2023, I'm guessing. Sorry, 15th April they have spent on the repair, and 20th April they are going to sell it. 15th April they have spent on the repair, and 20th April they are selling it for 1,80,000. So you're going to write over here by bank 1,80,000. Can you see 250,008 plus 30,000, but you're selling it only for 1,80,000. That means almost 1 lakh is loss. You're going to write by P&L 100,008. This is your situation in books of both the parties. Can you see in the books of Machinery Mart and also in the books of returned stock account? Yes, let's go into the third question now. Question number 3. Let's go into question number 3. On 1st April 2020, Guru purchased a machinery for cash price of 506,872 on hire purchase system from Machinery Mart. Again, we have Machinery Mart here. Okay. Payment is to be made at 1,50,000 down and balanced by 4 equal annual installments. Equal annual installments along with interest. Interest is charged at 15% per annum. Guru depreciates machinery at 20% per annum on written down value method. Guru paid down payment and first 2 installments but could not pay the remaining installments. Okay. First 2 installments he has paid. It is supposed to be actually how many? 4 installments, 2 he has paid. Okay. On 31st March 2023, Machinery Mart took possession of the machinery. 31st January 2021, 31st January 2022. 2 you have paid. Then when did they take the possession of the machinery? Could not pay the third one. Okay. You are required to prepare machinery account and Machinery Mart account in the books of Guru. They said since the problem is silent, they have given already the repayment schedule. You have the repayment schedule over here. How did they get the opening balance? It's given. Purchase for a cash price. Down payment is made. Okay. Can you see over here? 356,872. That is basically 506,872 minus 1,50,000. You will get 356,872. That is your opening balance. Now installment is how much? Installment will be equal. Installment will be equal. 356,872 divided by 4. 356,872 divided by 4. You will get every year 89,218 as the installment. Okay, on that your interest is also there, principal portion is also there. Interest is also there, principal portion is also there. These are the interests each year. They have already calculated. Interest will always be on opening balance. Remember, see, Opening balance into interest rate, opening balance into interest rate. So because it's already given in the question, I don't think we have to do it. So we'll only do the ledgers, machinery account and machinery mart account. So you can write in the books of Guru. In the books of Guru. In the books of Guru, first thing is machinery account. Machinery account. Then we have machinery mart account. We have machinery mart account. Machinery account and machinery mart account. Now what we will do, first thing, machinery is purchased on 1/4/2020, 506,872. So you're going to write 1/4/2020 to machinery mart account 506,872. Then here you're going to write 1/4/2020 by machinery account 506,872. 506,872 is the value. Clear? Next, what you're going to do, 1/4/2020, then you're going to get the down payment. How much is the down payment? Paid 1,50,000 down. So 31st of March 2021 will be the depreciation entries, and here 31st of March 2021 will be the interest entries. But on 1/4/2020, you're going to write the down payment entry to bank account. How much is the down payment? They have made a down payment of 1,50,000. 1,50,000. Okay, and you can write by interest account. How much is the interest? Already it is calculated in the question itself. First year, the interest is, sorry, here it is 53,531. 53,531. Okay. Are you paying the installment on the first year? Yes, 100%. So 31st of March 2021 to bank account. How much is the installment? 89,218. 89,218. That is the installment. Then what we are going to do, 31st of March 2021 to balance carried down. 506,872 plus 53,531 minus 1,50,000 minus 89,218. 3,21,185. 3,21,185. Clear? And 1/4/2021 by balance brought down. 3,21,185. Clear? What about machinery account depreciation? Depreciation at what rate? They said Guru depreciates machinery at 20% per annum, diminishing balance, written down value. You're going to write by depreciation. It's going to be 506,872 into 20%. So it's going to be 101,374. 31st of March 2021 by balance carried down. 506,872 minus 101,374. You will get 405,498. Then you have 1/4/2021 to balance brought down. 405,498. 405,498 is the balance on 1/4/2021. Next, you're going further. Second year, 31st of March 2022, interest. Second year, are you paying? Yes, 100% you're paying. 4148 is the interest. 4148 is the interest. 4148. You're going to write by interest account. Then you're going to write to bank account. 31st of March 2022. To bank account 89,218. And 31st of March 2022, you're going to write to balance carried down. 321,185 plus 40,148 minus 89,218. You get 272,115. Is it there in the question? Yes. Can you see? First year 267,654. Let's check again. First year, I think we have missed it. 506,872 plus 53,531 minus 1,50,000 minus 89,218. 321,185. They have missed it. Oh, sorry. Installment will be with interest. So we have missed it. Sorry. Installment is over here 142,749. 142,749. Therefore, 506,872 plus 53,531 minus 1,50,000 minus 142,749 will be 267,674. Correct. 267,674. You can see over here 267,654. Sorry. 267,654. And here you are going to bring it 267,654. That is your opening balance. And yeah, installment is not 89,218. Principal portion, it is 129,366. 129,366. So what is the closing balance now? 267,654 plus 4148 minus 129,366. You get 178,436 as the balance. 178,436 as the balance of second year. We'll move forward to third year. 1/4/2022 by balance brought down 178,436. Third year, okay, we'll calculate depreciation also. 31st of March 2022 by depreciation. Guru charged depreciation at the rate of 20% per annum. So 405,498 into 20%, 81,100. 81,100. 31st of March 2022. You can write by balance carried down 405,498 minus 81,100. 324,398. So you move forward 1/4/2022 to balance brought down 324,398. 324,398. Now you here what happens? 178,436. You have the balance. Okay. Third year again interest is calculated. 31st of March 2023 by interest. How much is the interest? For the 26,754. 26,754 is the interest. Okay. Asset also it depreciates 31st of March 2023 by depreciation. 324,398 into 20%. 64,880. 64,880. That is the depreciation. Then what is going to happen? This is the situation. Then what is going to happen? You have the asset. Are you paying the installment? No. Can you see Guru paid down payment first to installment, could not pay the remaining installment. 31st of March, they just take the machinery. They just take the machinery on 31st of March. So now what happens? Machinery is gone. Machinery is gone. So 31st of March 2023, you're going to write whatever you're supposed to pay. 178,436 plus 26,754. That gives you 205,190 to machinery account. Machinery is gone to machinery account. And here you're going to write 31st of March 2023 by machinery mart account. 205,190. So now what happens? 324,398 minus 64,880 minus 205,190. So you get 54,328. 31st of March 2023 by P&L. This is the loss for you. You have given the machine away at a lower value. You had to pay somebody, they took the machine. Now this is the loss. This is repossession question in the books of Guru, machinery account, machinery mart account. Let's go into the next question. Let's go into the next question. Okay, let's go into next question. Question number 4. Question number 4. X Limited purchased a vehicle for 2,80,000. Down payment was to be made at 91,000 and 3 installments of 76,000 each. At the end of each year, 3 installments of 76,000 each. Rate of interest is to be charged at 10%. Buyer depreciates asset at 15%. Written down value method. Because of financial difficulties, X Limited, after having paid the down payment of first installment at the end of first year, could not pay the second installment. However, the seller took possession of the vehicle. Seller, after spending 9,200 on repairs of the asset, sold it for 1,50,000. Show the relevant account in the books of the purchaser and the vendor. You have to show the books of purchaser as well as vendor. Can you see they have already calculated everything? Cash price minus down payment, they have given you. Installment paid is 91,000. How is it 91,000? They said installments will be 76,000 each. So that is basically installments. See over here, very specifically they have told at the end of each year 76,000. So what happens? Your opening balance is 1,89,000, correct? 1,89,000. On 1,89,000, they will calculate interest at the rate of 10%. 18,900 is interest. So now 76,000 is the installment paid each year. But what goes to the principal portion is this. Clear? But are you paying all the years? No, this person is paying only for first year. So this is the repayment schedule. I hope how you know how to calculate or prepare the repayment schedule if it is not given in the question. It will not be given in the question, only in these hint answers they are giving it. So in the books of, in whose books you are going to prepare first? X Limited. First thing, question number 4. In the books of X Limited. In the books of X Limited. In the books of X Limited, what you are going to do? You have purchased a vehicle. So you'll have the vehicle account. In the books of X Limited, you're going to have the vehicle account. And you're also going to prepare, in the books of X Limited, you're also going to prepare, after vehicle account, you're going to prepare the buyer. Who is the person purchased on hire purchase basis? We don't know. Hire vendor. Hire vendor account. Okay. And it is purchased and dates are not given in this question. So what you can do, first year, you're going to write purchase the vehicle for 2,80,000. So you're going to write vehicle account debited to hire vendor account 2,80,000. And here we are going to write buy vehicle account 2,80,000. By vehicle account 2,80,000. Next, after that, down payment is 91,000. Down payment is 91,000. So you're going to write to bank account 91,000 down payment. Then what we are going to do? Okay, 3 installments of 76,000 each at the end of each year. So now you're going to write over here by depreciation account. Okay, depreciation is 10%, 15% per annum. So 2,80,000 into 15%, you're going to write 42,000. Then you're going to write by balance carried down. You will get a balance of 2,38,000. 2,38,000. Then you're going to write to balance brought down 2,38,000. Balance brought down is 2,38,000. Then you're going here and you're going to write by interest account. What is the interest for the first year? They have already calculated 18,900. So you're going to write 18,900. Then you're going to write to bank account. What is the installment? Every year they have said that installment is 76,000. 76,000. He has paid the installment to balance carried down. 2,80,000 plus 18,900 minus 91,000 minus 76,000. 1,31,900. 1,31,900. You're going to write by balance brought down 1,31,900. 131,900. Clear? Here what is going to happen? Second year. When we go to second year, is he paying the installment? Could not pay the second installment, hence seller took the vehicle. So second year you're going to write by depreciation 2,38,000 into 15%, 35,700. Then you're going to see what is going to happen. Then you're going to add the interest here. Okay, by interest account. What is the interest for the second year? Interest for the second year is 13,190. 13,190. Second year's interest. Are you paying? Nothing. So it's going to be adjusted with machinery. Vehicle. Vehicle is taken to vehicle account. 131,900 plus 13,190. 145,090. And here you're going to write by hire vendor account 145,090. So if you see 2,38,000 minus 35,700 minus 145,090, you're getting 57,210, which is a loss. You're going to write by P&L account 57,210. 57,210. Is this clear? This is your solution. This is your solution in the books of X Limited. Who is the other person in the books of hire vendor? In the books of hire vendor account. So in the books of hire vendor account, what you're going to do? You're going to write first hire vendor account. You're going to prepare this person. Who is this? X Limited. X Limited account you're going to prepare in the books of hire vendor. You can see X Limited is the person. So you're going to write X Limited account debited to hire purchase sales account. Hire purchase sales. How much did you sell? 2,80,000. 2,80,000. Immediately he gave us money. So you're going to write by bank 91,000. By bank 91,000. Then what happens? He has to pay us interest. So to interest account, interest we have already calculated 18,900. Then he is going to pay the first installment. No problem there. By bank account 76,000. 76,000 is going to pay. Then what happens? By balance carried down 2,80,000 plus 18,900 minus 91,000 minus 76,000, 1,31,900. 1,31,900. Then what is going to happen? You're going to write to balance brought down 1,31,900. Balance brought down. Next, what is happening? Next, second year. Second year again you're going to write to interest. Interest is 13,190. Second year's interest, but he is not paying it. So now you will get by repossessed stock account. By repossessed stock account. 131,900 plus 13,190. 145,090. 145,090 is the value. So you have to prepare the repossessed stock account. You're going to prepare repossessed stock account and you're going to write to X Limited 145,090. You got the vehicle back and you're going to spend some money. Can you see? 9,200 is spent on repairs of the asset. So you're going to write to bank account and in bracket you're going to write repairs 9,200. And here you will write by, okay, sold it for 1,50,000. By bank 1,50,000 they got. 1,50,000 minus 145,090 minus 9,200. That means 4,290 is loss. By P&L 4,290. Is this clear? This is in the books of hire vendor. This is the situation. In the books of hire purchaser, this is the situation. Yes. Yes, students, let's go into the fifth question. Okay, fifth question. Rudra Transport purchases a truck on hire purchase from Sarkar Motor for 56,000 on 1st January 2021. So the cash price of the truck is 56,000 minus payment to be made 15,000 down and 3 installments 15,000 each at the end of each year. Rate of interest is charged at 5% per annum. Buyer depreciates asset at 10% written down value method. Because of financial difficulties, Rudra Transporter, after having paid the down cash and first installment at the end of the first year, could not pay the second installment and Sarkar Motors took possession of the truck. Okay, this is your question. Prepare truck account, seller account in the books of buyer, assuming the year ends on 31st of December. Yes, this is your situation. Now, we have the repayment schedule. I have already prepared the repayment schedule and kept for y'all. This is your repayment schedule. Okay, opening balance, installment, interest, principal, closing balance. First installment paid, second installment not paid. Okay, you know how to prepare repayment schedule. So in the books of Rudra Transporter, in the books of Rudra Transporter, okay, you prepare truck account. In the books of Rudra Transporter, you will prepare truck account. What is the asset? The asset is truck. So you will prepare truck account. And from whom did you purchase this? You have purchased it from Sarkar Motor. So you have purchased it from Sarkar Motor. So you will prepare Sarkar Motor account. Sarkar Motor account. Clear? Sarkar Motor account. Now what happens? Well, let's start. When did they purchase the truck? They purchased the truck on 1st January 2021. Entry we know. 1st January 2021. Truck account debited to Sarkar Motors account. Sarkar Motors account. It was purchased for 56,000. Here you are going to write 1st January 2021 by truck account 56,000. By truck account 56,000. Next what happens? Next, you're going to write payment to be made 15,000 down payment. So here you'll write 1st January 2021. Sarkar Motors account debited to bank account 15,000. 15,000. Next, and 3 installments of 15,000 each at the end of each year. 3 installments of 15,000 each. First year, what happens? Is he paying? Yes. What is the interest? First year 2050. So 31st of December 2021, you will write by interest account 2050. By interest account 2050. Next, after that, okay, 2050. Yes. Then 31st of December 2021, you're going to write to bank account. To bank account. What is the installment? Installment is 15,000 each. That time you will get 31st of December 2021 to balance carried down. Check the balance 56,000 plus 2050 minus 15,000 minus 15,000. 28,050. That's it with the first year. When we go to second year what's happening? Okay, first year depreciation we have to calculate 31st of December 2021 by depreciation account. They have told in the question depreciation is 10% per annum on diminishing balance 5,600. 31st of December 2021 by balance carried down 56,000 minus 5,600, 50,400. That will go to the next year. 1st January 2022, balance brought down 50,400. Clear? Yes. Now what happens? Sarkar Motor. Sarkar Motor, 1st January 2022 by balance brought down 28,050. 28,050. Now what's happening? Interest. 31st of December 2022 by interest account. What is the interest for the second year? 1403. 1403. Are they paying this? No. Then 31st of December 2022 depreciated by depreciation 5040. By depreciation it is 5040. Now what happens? 28050 1403. Now understand this, you are not paying anything. 31st of December 2022 you missed the second installment. They are taking the truck. So Sarkar Motors account debited to truck account. Sarkar Motors account debited to truck account 28050 plus 1403, 29453. And here you are going to write 31st of December 2022 by Sarkar Motors account 29453. Clear? So 50,400 minus 5040 minus 29453. Okay. 31st of December 2022, you have a loss by P&L 15,907. Truck is gone. 15,907 is your loss. This is your solution. 15,907, 29453. Yes. Is it clear? First you have to make the repayment schedule, then you have to prepare the truck account, then you have to prepare the Sarkar Motors account. That was question number 5. Let's proceed further. Question number 6. Question number 6. Now, Ashish purchased 7 machines on hire purchase on 1st July 2022. How many machines is purchasing? 7 machines is purchasing. The cash price of each machine was 50,000. 50,000 per machine. He was to pay 20% of cash price at the time of delivery and balance of 5 half-yearly installments starting from 31st December 2022. 5 installments, but it is half-yearly with interest rate 5% per annum. On his failure to pay the installment due on 30th June, it was agreed that Ashish would return 3 machines to the vendor and the remaining 4 machines would be retained by him. He could not pay the installment, so he took 3 machines and remaining 4 machines are kept. The returning price of 3 machines was 40,500. They agreed that the price will be 40,500 for returning. Ashish charges depreciation at the rate of 20% per annum. Vendor, after spending 1,000 on repairs, sold away all the 3 machines for 40,000. Show machines account and vendor's account in the books of Ashish and Ashish's account and goods repossessed account in the books of vendor, assuming that their books are closed on 30th June each year. 30th June is their closing date. Now what we need first thing, always the first thing that we require is question number 6. The first thing that we require is repayment schedule. Repayment schedule is the first thing that is required. Is it clear? Yes. So how many installments? 5. When does the first installment start? 31st December 2022. 31st December 2022. 30th June 2023. 31st December 2023. 30th June 2024. And 31st December 2024. But when was the installment he has missed? Which installment he has missed? 30th June 2023 he has missed. Okay, 30th June 2023 he has missed. So we need the repayment schedule repayment schedule only till 30th June 2023. 2 installments are even enough. Opening balance, installment, interest, principal, and closing balance. And closing balance. Now what we have to understand? Okay, 50,000 per machine. 50,000 per machine is the cost. So 50,000 into 7 machines minus 20% down payment. So 50,000 into 7 minus 20%, that makes it 2,80,000. Opening balance is 2,80,000. Now what is the installment? balance of 5 half yearly installments starting from 31st December with interest of 5% per annum. Okay. 5 half yearly installments. Now, 2,80,000 divided by 5. So that means every time you're going to pay 56,000, 56,000, 56,000, 56,000 and 56,000 together with interest they said. 2,80,000, interest rate is 5% per annum. This is only for 6 months, no? So it will become 7,000. So installment will be 56,000 plus 7,000, 63,000. Now 2,80,000 minus 56,000, your closing balance is 2,24,000. 2,24,000 becomes the opening balance. On that you calculate 5% into 6 by 12. So 5,600. So 5,600 plus 56,000, you're going to pay 61,600. So 2,24,000 minus 56,000, 1,68,000. 1,68,000. Okay, this is the situation. This is enough. This is not required because here only there is a default. Here only there is a default. After that there is nothing. 36 only he missed. As soon as he missed, 3 trucks are taken. Okay. So now what we are going to do, in the books, show machine account and vendor account in the books of Ashish. In the books of Ashish, you're going to prepare machinery account. You're going to prepare machinery account. Then what we are going to prepare? Vendor's account. Vendor's account. So when did they purchase this? 1st July 2022. 1st July 2022 you are going to write 1st July 2022 machinery account debited to vendor account. Machinery account debited to vendor account. How much is it? Machinery 50,000, 7 machines. 50,000 into 7. That makes it 3,50,000. And here you are going to write 1st July 2022 by machine account 3,50,000. By machinery account it is 3,50,000. Now, what's happening? Are you getting a down payment? Yes. 1st July 2022, vendor account debited to bank account 3,50,000 into 20%, 70,000 down payment. 70,000 is the down payment. Now what you're going to do, 70,000 down payment done. First installment is on 31st December 2022. 31st December 2022, you're going to write by interest account. How much is the interest for the first installment? 7,000 interest. 7,000. Yes, 7,000. So now what happens? First 31st December 2022 to bank account. The installment, first installment is 63,000. Installment is 63,000. 63,000. Then 31st of December 2022 to balance carried down. To balance carried down. So 3,50,000 plus 70,000 minus 70,000 minus 63,000. The balance is 287. Sorry. Why are we calculating balance? It's 30th June, right? Yes, we don't need to calculate balance. It is 30th June. Yes, minus. Yes, You don't need to write the balance because it is 30th June, the year end. Then what happens? On 30th June 2022, you're going to write by interest account. 6 months interest. 30th June, the interest is 5,600. 5,600. Okay. Then are you paying the installment? No, you're not paying the installment. What did they tell in the question? See, you failed to pay his failure to pay the installment on 30th June 2023. It was agreed that Ashish would return the 3 machines to the vendor and the remaining 4 machines would be retained by him. Returning price is 40,500. Ashish depreciates at 20%. So what will happen over here? Here you're going to write 30th June 2023 by depreciation account. 3,50,000 into 20%. That is basically 70,000 depreciation. 70,000 is the depreciation. Now what happens after you calculate 70,000 depreciation? Next thing is, okay, he is going to take over the machinery. 30th of June 2022 to machinery account. He has taken 3 machines. Can you see he has taken 3 machines and 4 machines would be retained. The returning price of the 3 machines is 40,500. 40,500. 3 machines. Okay, you can take it as 40,500 into 3. Per machine it is 40,500 into 3, 1,21,500. Here you are going to write 36/2023 by vendor account 1,21,500. By vendor account it is 1,21,500. Then what we are going to do? 1,21,500, 30th June 2023. Okay, we have to check whether there is loss or profit. So what happens over here? 3,50,000 minus 70,000, 2,80,000. Okay, let's calculate it separately. Working note. Value of machines on 30th June. Value of machines on 30th June will be 3,50,000 minus 70,000 depreciation. This becomes 2,80,000 divided by 7 machines is equal to 40,000 per machine. 40,000 per machine. And can you see over here? The returning price of 3 machines was 40,500. Okay, all 3 machines together it is 40,500. Not one, all 3 machines together. Yes. So here you can take 40,500. All 3 machines. So now what happens? 40,000 per machine into 3. 1,20,000 rupees. Value is 1,20,000. What is taken over is 40,500. 1,20,000 minus 40,500. 79,500 is loss. 79,500 is loss. So now what we will do? We will write over here by P&L 79,500. And on 30th June 2023 you are going to write by balance carried down. What is the balance? The balance of the remaining 4 machines. Remaining 4 machines are proper. He is going to use it. Minus 70, minus 4,500, minus 79,500. You have 1,60,000. 1,60,000 is the value. Now when we go to vendor's account, look at vendor's account. In vendor's account, what is going to happen? 40,500 is transferred. 30th June 2023. Tell me 22. Tell me one thing. Is it 23? Yes, sorry. 30th June 2023. Now, what will happen on 30th June 2023 is we are going to tell boss, you did not pay the money, so I'm taking 3 machines. Remaining 4 machines, pay the money. End the story. End the story here only. 3,50,000 plus 70,000 plus 7,000 plus 56,000 minus 70,000 minus 63,000 minus 40,500. 2,39,500 is paid to bank account balancing figure. That is the end of the story. 2,39,500, and this is the calculation of the value of machines. So we have machinery account, we have vendors account, and this is the calculation. Next, after that, what is happening? Okay, you can see loss on surrender is 79,500 and transfer to P&L. That is for the other person. Transfer to P&L. We will see what is happening. Now, understand this. In the books of the other person is whom? In the books of the vendor, right? They have asked repossessed in the books of vendor, repossessed stock account, Ashish account, and repossessed stock account. In the books of vendor, you have Ashish. So you can write Ashish account, and you have repossessed stock account. Repossessed stock account. Okay, so first what you're going to do here, this person is selling the machine. So on what is that date? 1st July 2022. 1st July 2022. You're going to write Ashish account debited to hire purchase sales 3,50,000. Then 1st July 2022 by bank 70,000. Got down payment, right? Then 31st December 2022 to interest account. How much is the interest? We have already calculated 7,000. Then 31st December 2022 by bank account. Are they paying? Yes. How much are they paying? 63,000. Then 30th June 2023 to interest account. To interest account, what's happening? 5,600. Did he pay? Nothing. Did not pay anything. 30th June 2023 by 30th June 2023 by repossessed stock. Repossessed stock. We got 3 trucks back, 40,500. And 30th June 2023 for the remaining we should get money. So by bank. That should be the situation. 3,50,000 plus 7,000 plus 56,000 minus 70,000 minus 63,000 minus 40,500. 2,39,500 is received. Can you see here also it was 2,39,500. Now what's going to happen? On 30th June 2023, you got to Ashish 40,500. Then what happens? 30th June 2023, you spend some more money on repairs. So to bank 1,000. Can you see? They have spent 1,000 on repairs. 1,000 on repairs. And then he's finally selling it for 40,000. So 30th June 2023 by bank 40,000. 41,500 machine they are selling for 40,000. 30th June 2023 by P&L 1,500. This is the loss. You can see over here. Yes. In the books of hire vendor, this is how it will look. In the books of hire purchaser, this is how it will look. Calculation is also there. After this, we should proceed into the next question. Okay, students, let's continue. We'll go into question number 7 now. Okay, let's proceed to question number 7. Go-Kart Logistics acquired a delivery van on hire purchase on 1/4/2023 from Ashima Enterprises. The terms were as follows. Okay, hire purchase price, down payment, first installment, second installment, third installment, fourth installment. Is this clear? Okay. Cash price of van 1,50,000. You are required to calculate total interest and interest included in each installment. They didn't ask you, okay, to prepare ledgers or something like that. In this, they have asked you to prepare that table. Question number 7. Remember our table? Repayment schedule. If you do the repayment schedule, you'll get to know how much is the interest in each installment. Now, first thing is opening balance. What is the date? Okay, you can take years. They have not given dates here. So, year 1, 2, 3, 4. Let's keep some space for calculation. 3 and 4. We have opening balance, installment, interest, principal portion, and closing balance. This should be the situation. Okay, now first, higher purchase price is 180. Higher purchase price is 180. We want what? Cash price. Cash price is 120. Cash price is 120. If you see here only, no, total interest we know. How do we get the total interest? 180 minus 150. 1,80,000 is higher purchase price. 1,50,000 is cash price. Therefore, 30,000 is the interest. Total interest. But each installment interest we have to calculate. So now what happens? 1,50,000. So opening balance is 1,50,000 minus down payment. How much down payment they are making? 30,000. So this becomes 30,000. So your opening balance is 1,20,000. Clear? Okay. Now installments they have given 50, 50, 30, 20. 50, 50, 30 and 20 is the installments. Now you can see over here, okay, installment you can write 50,000 in the first one, 30,000 in the second one. Sorry, second one is also 50,000, 50,000 in the second one, 30,000 in the third one, and 20,000 in the fourth one. 50, 50, 30 and 20. What is the interest rate? What is the interest rate? We don't know. Okay, if you see this, anywhere in the question, interest rate is not given. Interest rate is not given. So what we will do in such case, we will calculate something called as IRR. Okay, IRR. So this type of questions, okay, there is no chance that they will ask in the exam. They have to give the interest rate. In this question, say they have given interest rate as 11.39%. Okay. Now, IRR is given in the question itself. They have to give it. Otherwise, in the exam, it is not possible without interest rate to calculate. It goes into an FM question. FM question it becomes when you have to calculate IRR. Okay, 11.39%. So now what we will do, interest at the rate of 11.39%. Interest at the rate of 11.39%. So first year what happens? 1,20,000 into 11.39%. It becomes 13,668. 13,668. So out of 50,000, if 13,668 is interest, 36,332 is principal. So now what happens? 1,20,000 minus 36,332. You have 83,668, which is the closing balance. Now that will be the opening balance. 83,668 will be the opening balance. Now on that, if you calculate 11.39%, 9530, interest will be 9530. So out of 50,000, 9530 if you remove, you will get 40,470. 40,470 is your principal portion. So 83,668 minus 4,470, you will get closing balance as 43,198. So opening balance will be 43,198. On that you calculate 11.39%. You get 4920. 4920. So out of 30,000, if you have given 4920 as interest, you get 25,080. Principal is 25,080. So 43,198 minus 25,080. You will get 18,118 as the closing balance. That will be the opening balance, 18,118. Okay, now if you check, directly you will always write 18,118 in the last column. 18,118 and this becomes 0. And 20,000 minus 18,118, you are getting 1882. 1882 is your interest portion. If you total this 13668 plus 9530 plus 4920 plus 1882, if you total this, this is 30,000. Remember, we told that the total interest is 30,000. So you're getting 30,000 over here. Is this clear? Yes, that is question number 7 from your material. We are done with all the questions of hire purchase. Next, what we will do, we will go into CMA Inter June 2024 question. CMA Inter June 2024 question. There should be one question from hire purchase. Yes. Can you see one question is asked for 7 marks? For 7 marks, they have asked this question. Mr. Rana purchases a car on hire purchase system on 1/1/2021. The total cash price of the car is 4,50,000. Payable 90,000 down and 3 installments 1,70,000. 1,50,000 and 108,460 payable at the end of first, second and third respectively. Interest is charged at 10% per annum. Interest is charged at 10% per annum. You are required to calculate interest paid with each installment. Each installment's interest they have asked. So basically what did they ask? They asked you to prepare the repayment schedule only. So if you see June 2024, this is the June 2024 question that they have asked. And this question is question number 3B. Question number 3B. You can see they are asking you to prepare repayment schedule. So what you will do, they want to know what is the interest in this thing, correct? They want to know what is the interest in each installment. You are required to calculate interest paid with each installment. So now what happens? What are the 3 years we have? 1/1/2021 they have taken. So 31st of December 2021, 31st of December 2022, 31st of December 2023. Clear? You have to calculate opening balance, installment, interest, principal and closing balance. Okay, this is the situation. Opening balance, installment, interest, principal and closing balance. Okay, so June 2024. Now see what they have told. What information do we have? The total cash price is 4,50,000, payable 90,000 down payment. Okay, that means 4,50,000 minus 90,000 down payment. That means 3,60,000 is your opening balance. 3,60,000 is your opening balance. So 4,50,000 minus 90,000, 3,60,000 is your opening balance. And 3 installments of 170, 150 and 108,460. Okay, 3 installment, 1,70,000. Okay, next installment is 1,50,000. And the last installment is 108,460. 108,460. Is it clear? So now what happens? You have 1,70,000 plus 1,50,000, 108,460. Total amount you have paid around 4,00,000, 4,28,000. That means remaining is everything interest. Now how will you calculate interest? Understand this. Opening, they have told in the question itself, interest is 10% per annum. So now you have to take 3,60,000 into 10%. This becomes 36,000 interest. And here you are going to take 1,70,000 you have paid. Out of that 36,000 is interest. So 1,70,000 minus 36,000, 1,34,000 is principal portion. Closing balance will be 3,60,000 minus 1,34,000, 2,26,000 is your closing balance, which will become the opening balance, 2,26,000. Is this clear? 2,26,000 if it's the opening balance into 10%. So now what happens? 2,26,000 into 10%. This becomes 22,600. 22,600. So out of 1,50,000, if you're paying 22,600 interest, so what will you do? Calculation 1,50,000 minus 22,600 is interest. So 1,27,400 is your principal portion. So now 2,26,000 minus 127,400, your closing balance is 98,600. That will be your opening balance, 98,600. Clear? Now what will happen? 98,600 is the principal portion for the last year. You are going to pay 98,600. So closing balance becomes 0. So 108,460 minus 98,600. Last year you're going to calculate like this: 108,460 minus 98,600, which will be 9860. 9860. You can see 10% of 98,600 is 9860. This is your question. Okay, they asked for 7 marks. You are required to calculate interest paid with each installment. So the interest paid with each installment is here 36,000. Okay, here it is 36,000. Here it is 22,600. Here it is 9860. These are the three things. Interest paid with each installment. June 2024, they asked this question. Easy question they have asked. Okay. Next, we'll go into December 2023. December 2023, you can see they have asked a question from hire purchase. Have they asked any question from hire purchase? December 2023. Partnership, we have already solved. Yes. Accounting standards, they have asked. Fire insurance, branch accounts, done. Partnership again. Incomplete records, bills of exchange, lease, they have asked that time. Final accounts, yes, that's it. They have not asked any descriptive question from hire purchase. So with that, our hire purchase question solving of the unsolved questions at the end, and the case is not there in hire purchase, unsolved case is not there, and your past examination questions. We have completed all three. Okay, we have completed all three. This is the end of hire purchase. Yes, students, let's go into the next chapter where we are going to solve the numerical questions and unsolved questions which are there at the end, and the past examination questions. Okay, first, this is accounting standards. Accounting standards we are going to discuss. First question, we'll go into the first question. Alpha Limited contracted with supplier to purchase machinery which is to be installed in its one department in 3 months time. Okay. Special foundations were required for the machinery which were to be prepared within the supply lead time. Okay. The cost of site preparation and laying foundation was 1,40,000. These activities were supervised by a technician during the entire period who is employed for this purpose of 45,000 per month. Machine was purchased at 1 crore 58 lakhs and 50,000 transportation charges were incurred to bring the machine to the factory site. An architect was appointed at a fees of 30,000 to supervise machinery installation at the factory site. You are required to ascertain the amount at which the machinery should be capitalized. We have discussed now, when machinery is purchased, whatever amount we have spent on bringing that machinery to this present location and condition, that will be taken as machinery cost only. It will be capitalized. Okay, so we are going into question number 1. Question number 1. Amount to be capitalized. Amount to be capitalized as per AS 10. Amount to be capitalized as per AS 10. What is the cost of the machinery? Machinery was purchased at 1 crore 58 lakhs. Cost is 1 crore 58 lakhs. Clear? Next, you have transportation charges of 50,000 plus transportation charges of 50,000. Clear? Next, after that, what do we have? You can see from starting. Site preparation was there, 1,40,000. Site preparation is required to install the machinery. So site preparation, 1,40,000. Clear? Next, what did we spend? It was supervised by a technician during the entire period who is employed for this purpose, 45,000 per month. Okay, how much time did we take? How much time did we take? Now, can you see over here? Installed in one department in 3 months time. That means we have installed one technician. We have hired one technician for 3 months. Technician's fees. Technician's fees, you can take 45,000 into 3 months. 1,35,000. 1,35,000. Machine was purchased at 1 crore 50,000 transportation fees. Architect was appointed at a fees of 30,000 to supervise the machinery installation. So add the architect fees also. That is total 30,000 we have taken. 30,000. Clear? That should be it. I don't think there is anything else. So 1 crore 58 lakhs plus 50,000 plus 140 plus 135 plus 30,000. You have total 1 crore 61 lakh 55,000. 1 crore 61 lakh 55,000. This is the amount to be capitalized. This is the amount to be capitalized, and this will be shown as property, plant and equipment in balance sheet. That is why it is AS10 where we do PP. AS10 PP. Is this clear? Next, we'll go into second question. Mrs. A bought a forward contract for 3 months. Okay. Forward contract for 3 months, US dollar 1 lakh. On 1st December at US dollar 1 is equal to 47.1. We bought it for 47.1 when the exchange rate was 47.02. On 31st December when it closed his books, the exchange rate was 47.15. On 31st January, he decided to sell the contract at 47.18. Okay. Show how the profits from the contract will be recognized in the books as per AS11. Now, how much dollars he purchased? He purchased $1 lakh. Okay, $1 lakh. Okay, I'll show in the notes only. Yes, dollars 1 lakh. Correct? Okay. Now, how much did he purchase it for? 47.1. Bought a forward contract 47.1. Okay, and he decides to sell the contract on that day. Spot rate minus forward rate. Always what you're going to see, spot rate minus forward rate. 47.1 when the exchange rate was 47.02. Okay, but then what happened? 47.1 what you have recorded, he sold the contract for 47.18. So 47.18 minus 47.10. So he made a profit 47.18 minus 47.10, 0.08 into $1 lakh. Basically, he made a profit of 8,000 rupees. Profit is 8,000 rupees. See, in forward contract, what you have to know, if the contract is for hedging purpose, then spot rate minus forward rate, you recognize the profit or loss over the period of the contract. If the contract is for speculation purpose, that means you're trying to make profit with it, then what we will do, you will recognize the profit as and when it is earned, or loss as and when it is incurred. Okay, third one. Let's go into the third one. Okay. Goods purchased on 1/1/2022. Okay. One for US dollar 15,000, 75. Exchange rate is 75. Goods purchased. Exchange rate on 31st of December, March 2022 is 74 for $1. Date of actual payment is 7/7/2022. You are required to ascertain the loss or gain to be recognized for financial year ended 31st March 2023 and 31st March 2024. Now here what we have to understand, initial recognition. In AS11 you have one thing, that is initial recognition. Initially, what did you recognize it as? At what value? Initial goods purchased. Usually it is purchase account debited to creditors. Okay, now what happens? $15,000 at 75. So $15,000 into rupees 75. So now what happens? 15,000 into 75. You got 1 crore 12 lakh 50,000. 1 crore 12 lakh 50,000. This is your creditor balance. You have to pay so much to your creditors. Now in AS11 we have seen that discussion. Monetary items, if there are any monetary items like creditors, debtors, all those things, loan given, loan taken and all, that time what we will do at the balance sheet date, we'll restate the creditors. So restatement of creditors on balance sheet date. Restatement of creditors on balance sheet date. On balance sheet date, what happened? The value has gone down to 74. Exchange rate is only 74. So now what happens? $15,000 into 74. So 15,000 into 74, that makes it 1 crore 11 lakhs. Can you see? You're getting 1 crore 12 lakh 50,000 minus 1 crore 11 lakhs. 1 lakh 50,000 is your profit. Profit, basically not profit, forex gain. We'll call it as forex gain for the year ended 31st of March 2020. When did they purchase it? 22. 31st of March 2022. Why? If the foreign currency rate goes down, I have to pay less money. Creditors, it's good. If the foreign currency rate goes up, then I have to pay more money. It would have been a loss. Now, after that, what do you have? After this, can you see? Actual payment is on this date, 7/7/2022 at 73. Again, 1 rupee per, 1 rupee per dollar, it went down. So now what happens? On date of payment, what was the actual payment? On date of payment, the actual payment is $1,50,000. Okay, $1,50,000 into 73. Sorry, not 1,50,000, 15,000 into 73. So 15,000 into 73. Again, you are paying only 10,95,000. Sorry, 1 crore, not 10 lakh, 1 crore 9,50,000. So therefore, again you have forex gain, and this forex gain is for the year 31st of March 2023. So it is going to be 75,000. You have a forex gain of 75,000. Is this clear? This is the situation. Third one. Next, fourth. What happens? Fourth one. Okay, first you recorded it as 75. If you're confused with the third one, first you recorded it as 75. Creditor is showing 75, but on the balance sheet it has gone down to 74. So it's a gain. And then when you have to actually pay, that date has gone down to 73. So it's again a gain. Clear? Yes. On 1/4/2022, AS Limited received government grant of 300 lakhs for acquisition of machinery costing 1,500 lakhs. Okay, grant was credited to the cost of the asset. In government grant, you have two methods. One, grant is reduced from the asset. Another one, grant is treated as deferred government grant. The life of the machinery is 5 years. The machinery is depreciated at 20% per annum on WDV basis. Machinery is depreciated 20% per annum on WDV basis. Company had to refund the grant in May 2020 for due to non-fulfillment of certain conditions. How would you deal with the refund of the grant in the books of AS Limited as per AS 12, assuming the company did not charge any depreciation for the year 2024? Okay, this is 2024. 20x4 is 2024. Now understand this. Question number 4 in standards. Let's go to question number 4. Cost of the asset. Cost of the asset. How much is the cost of the asset? Cost of the asset is 1,500 lakhs. You can write rupees in lakhs. Rupees in lakhs. So cost of the asset is 1,500. What is the government grant received? Government grant received is 300 lakhs. 300 lakhs is the government grant received. That therefore you are at 1,200 now. Do you have any scrap value? Any scrap value is mentioned. Life of the machine is 5 years. Machine is depreciated at 20% per annum on WDV basis. WDV basis. Therefore, depreciation for which year we are talking about? 22-23. 22-23 depreciation at the rate of 20%. So 1,200 into 20% will be 240. Now you have 960. This is the WDV on 31st of March 2023. Clear? Then what happens? When is the government grant becoming refundable? Company has to refund in May 2024. May 2024 only we have to refund it. So now what happens? Understand this. Minus depreciation for 23-24 at the rate of 20%. So 960 into 20% will make it 192. So this becomes 768. This is the WDV on 31st of March 2024. That is the WDV on 31st of March 2024. And in May, this asset is becoming refundable. In May, asset is becoming refundable. So what we are going to do, company refunds due to non-fulfillment of the conditions. How will you deal with it? How much are you going to refund? That is the question. How much are you going to refund? So now if the grant is refundable, what you will do? Add the government grant refundable. Government grant refundable. Add that 300 back. So 768 plus 300, it becomes 1068 minus depreciation at the rate of 20% for 2425. Now what you will do, 1068 into 20%, 213.6. So it becomes 1068 minus 213. 1068 minus 213.6. You have 854.4. 854.4. Is it clear? Yes, this should be the solution. So 854.4 is the solution or answer. Question number 5. They have made, I think, some error. You can have a look at the question here. 914.4 it seems. Okay. Question number 5. We'll go into question number 5. That's the last question from standards that is there in the unsolved questions. Ashima Limited has obtained an institutional term loan of 580 lakhs for modernization and renovation of its plant and machinery. Okay, plant and machinery acquired under the modernization scheme and installation completed on 31st March 2022 amounted to 406 lakhs. 58 lakhs has been advanced to suppliers for additional assets, and the balance loan 116 lakhs has been utilized for working capital purpose. Remember, this is AS 16 borrowing cost. In borrowing cost, what's happening? Okay, there can be specific borrowing as well as general borrowing. Here what they have done, they have taken 580 lakhs and they're using it for modernization of machinery, only 406 lakhs. 58 lakhs they give advance to supplier, that is general borrowing. Okay, general borrowing, and then they have given 116 lakhs has been utilized for working capital purpose. Now understand this. Loan borrowed. How much is the loan borrowed? 580 lakhs. 580 lakhs. Amount spent. Amount spent. Okay, amount spent. Now you can understand. First, what they have spent it on? 406 lakhs. Amount spent 406 lakhs. Okay. And this is spent for plant and machinery. So it is qualifying asset. What is qualifying asset? Whenever you spend money on an asset which is taking some time for it to be ready for its intended use, that is called as qualifying asset. Anything else you spend on, it's non-qualifying asset. 406 lakhs. Then they spend 58 lakhs for advance. 58 lakhs is given as advance. This is not qualifying asset. Okay. Then they have spent 116 lakhs. 116 lakhs they have given it to utilized for working capital purpose. This is also not qualifying asset. This is also not qualifying asset. 406 plus 58 plus 116. So total amount you can see 580 lakhs. Now, only if it is spent on qualifying asset, such interest will be capitalized. Other interest will be transferred to loan. Transferred to P&L. Okay. Now, accountant is on a dilemma how to account for the total interest of 52.2 lakhs incurred during the year on the entire institutional term loan of 580. Discuss how the interest would be treated in the financial statements. Now, how much is the borrowing cost? Borrowing cost is 52.2 lakhs. 52.2 lakhs. So what you will do? Okay, how much is spent on qualifying asset is 406. So you will write 52.2 into 406 divided by 580 is equal to 406 divided by 580 into 52.2, 36.54 lakhs. 36.54 lakhs, okay, will be capitalized. That means it will be added to the plant and machinery cost. Then what about the balance? Balance, they are using it for general purpose, right? So 52.2 lakhs into balance is 58 plus 116. The whole thing divided by 580. 58 plus 116 divided by 580 into 52.2, 15.66. 15.66 lakhs. This will be debited to P&L. This will be debited to P&L because it will be considered as an expense. Is it clear? This is the fifth question which they have not solved at the end of the material. Clear? We'll go into June 2024 and see what is the question they have asked from accounting standards. June 2024, we will see branch, fire insurance, all that we have done. Okay, then they have asked one question, provision, AS, accounting standard they have asked. Then AS 12 also they have asked one question. Yes, we can have a look at question 7E. Okay, Rukmani Limited has made a rights issue of shares in 2022. In the offer document to its members, it has projected a surplus of 60 crores during the accounting year ended 31st March 2023. The draft results for the period prepared on the hitherto followed accounting policies and presented as perusal of the board of directors showed a deficit of 15 crores. The board, in consultation with the managing director, decided on the following. Now, they have not asked AS, this is not provision, it's actually AS1, accounting standard 1, notes to accounts. AS1 they have asked. Okay. Value year-end inventory at works cost 75 crores instead of hitherto following valuation of inventory at prime cost 45 crores. What they are going to do, they are going to increase the inventory valuation from 45 to 75. They have just asked you, see end of the question, as chief accountant of the company, you are asked by the managing director to draft the notes on accounts for inclusion in annual report. You are just going to write notes to accounts. What is notes to accounts? Notes to account is where you show the extra, information. So here what you will write, value year-end inventory at 75 instead of 45. So you will write, okay, year-end inventory has been decided to be valued upwards, okay, at 75 crores, which is works cost, instead of the earlier method of following to record it at prime cost. Okay, this is what you're going to write. And as a result of this, 75 minus 45, okay, you will have 30 crores of extra profit as closing stock is shown at higher valuation. Okay. Next, you are going to show not to provide for after sales expense during the warranty period till the last year. Okay. Provision at 2% on sale used to be made under the concept of matching the cost against revenue and actual expense used to be charged against provision. Board now decided to account for the expenses as and when actually incurred. Sales during the year is 900 crores. Earlier, what they used to make provision for the after sale expense, warranty. So 900 into 2%, 900 into 2% would be 18. 18 would be the provision before. Till last year, they used to make provision. This year, they didn't make provision. So you're going to write the note, okay, due to the change in the method of provisioning, the after sale expenses, okay, 900 into 2%, 18 will be additional profit in the current year as provision is decided not to be maintained from the current year and expense will be taken as and when they incur. Okay, third one, provide for permanent fall in the value of investment on which fall had taken place over the past 5 years, provision being 15 crores. Okay, provide for permanent fall. Now, what we are going to do? We are going to write, due to the decline in the value of investment, and if it is a permanent decline, it's looking like a permanent decline, you're going to write, due to the decline in the value of investment, a provision of 15 crores needs to be provided. Provision of 15 crores needs to be created due to the decline in the fall of investment, decline in the value of investments. This is the theory question which you're going to write. Okay. Other than that, they have asked one more theory question from AS2 12. State the provisions of Accounting Standard 12 relating to presentation of government grants in financial statement. Entire chapter they have asked. Remember, in our regular videos, you can see that we have discussed if government grant is received for purchase of asset, what to do. If it is for revenue expenditures, what to do. If it is given as promoter's contribution, what to do. All this you are going to write. Theoretical questions. Okay, that should be it. There isn't anything from accounting standards they have asked in that attempt. June 2024. We'll go into December 2023. December 2023, they have asked at the end, I think, after final accounts and all that things, they have asked one question. Let's go. Yes, you can see AS10 one question is asked, AS12 one question is asked. 14 marks they had asked over there. Let's see this question number 7A and 7B. Both we will solve. December 2023. December 2023, you have a question 7A. 7A. ABC Limited is setting up a new factory outside the city limits in order to facilitate the construction of the refinery and its operation. ABC Limited is required to incur expenditure on the construction, development of railway siding, road and bridge. Though ABC Limited incurs or contributes to the expenditure on the construction or development, it will not have the ownership rights of these items, and they are also available for use in other entities and public at large. Whether ABC Limited can capitalize the expenditure incurred on those items as property, plant and equipment? If yes, how should these items be depreciated and presented in the financial statement of ABC Limited? Theoretical question again. What did they tell? ABC Limited setting up a new refinery outside the city limits. In order to facilitate the construction of the refinery in its operation, what they did? Required to incur expenditure on construction, development of railway siding and road and bridge. We are setting up one refinery. That refinery is being set up. When we are having a refinery, they constructed railway siding and road and bridge. Why? Because they want that railway siding or road or bridge to transport it. Okay, now see. Though ABC Limited incurs the expenditure on the construction development, it will not have ownership rights of these items as they are also available for use to other entities and public at large. You have constructed it, but do you have ownership rights of that? No. You are not the owner of the asset. You are just going to use the asset. Whether ABC Limited can capitalize the expenditure incurred on these items as property, plant and equipment. So what you are going to do, in this case, what you can do, you are not the owner of the asset. Correct? You are not the owner of the asset, but you have spent money. Are you going to use the asset? You are the beneficial user. Yes, beneficial user. You can see AS1. In AS1, we have discussed one concept called as substance over form. You might not be the owner of the asset, but you will also be using the portion of the bridge. You will also be using the portion of the bridge. So what you are going to do, this bridge cost. Why did you construct the bridge? Because you are having a new refinery, setting up a new refinery. Bridge cost will also be taken as property, plant and equipment. It will be taken as property, plant and equipment, and whatever is the useful life that we feel we can use the bridge for, that will be the useful life and it will be depreciated over the useful life. Is it clear? That should be it. Then we go into B. ABC Limited has received the following grants from the government of Delhi for its newly started pharmaceutical business. For its newly started pharmaceutical business, they have received the following grants. Okay. How should you recognize the grants in its books of accounts? They have asked. First, 20 lakh received for immediate startup of business without any condition. So this is taken as promoter's contribution. 1 second. Let's go. 7A, that was theory. 7B is also theory, but we'll write it. Okay. First one is 20 lakh received. 20 lakhs. See over here. 20 lakh received for immediate startup of business. So starting the business, the government has given you money. This is promoter's contribution. Promoter's contribution, and this will be credited to capital reserve. This will be credited to capital reserve. Is it clear? Next one. 50 lakh received for research and development of drugs required for the treatment of cardiovascular diseases with the following conditions. The drugs should be available to the public at 20% cheaper from current market price, and the drug should be in accordance with the quality prescribed by the World Health Organization. 50 lakh is received for research and development. Research and development. Development is not completed, correct? Now it is in research phase. So what you will do, 50 lakhs will be credited to P&L. Credited to P&L because it's to cover the expenses. If you are receiving something to cover the expenses, then it will be considered as income and it will be credited to P&L. Third, 2 acres of land received for setup of plant. 2 acres of land received for setup of plant. What will you do? Immovable property. You have received the immovable property. So therefore, in this case, land to be recorded. Land to be recorded. You just got the land, no, without paying even 1 rupee. So land to be recorded at nominal value. Nominal value of rupees 1, rupees 10, rupees 100, rupees 1000 and so on. Rupees 1000 and so on. This is the nominal value. Clear? Next, after that, what they have asked? They have told 2 lakh received for purchase of machinery of 10 lakhs. Useful life of the machinery is 5 years. Depreciation on this machine is to be charged under straight line basis. So here what you do, 2 lakh is received, correct? So you are going to write rupees 2 lakh received for purchase of machinery. Rupees 2 lakhs received for purchase of machinery. Okay, what we can do? Reduce from plant and machinery or treat it as deferred government grant. Reduce from plant and machinery or treat it as deferred government grant. Okay, both the treatments we know. This is the question that they have asked for 7 marks. Question that they have asked for 7 marks. After that, it was partnership. That is it. Then basics and all they have asked. Yes. So from standards, these are the unsolved questions and unsolved case. Luckily not there in standards, and the past examination questions which we have quickly discussed. Okay. Yes. See you in the next chapter.